Grateful day, team. Grateful day. Thank you all for being here. That is what I'm looking at coming into today. Definitely going to take my time this morning. Big shout out to the team checking in. Greetings to everyone. Jared Lewis, Todd Macon, Big Ben is in the building. Big thanks to those of you who are also kicking it with us on Kick as well. Thank you for that. We are live right now on Kick as well. And here we go. Let us prepare. A'udhu billahi. A'udhu billahi minash shaitanir rajim. And we are open. I did not want to start off with pre-market on the 5-minute chart. I didn't think that would be necessary today. I believe we could just come right in and pick up from yesterday's action as well. Bit of a control selling algo coming into market open. If anybody has any plans they would like to share, please feel free to put them in the chat. Let's talk about money. Great place to get some would be above that 685.6 with a continuation to the upside. There is, especially if you look on the daily chart. Let me blow it up on the daily chart to show you what I'm saying at, what I see. On the daily chart here, yesterday's wick, day before yesterday's wick, and yesterday's wick. Above the candle, there are some bears here who will be in a first person position to start covering if the market price were to get above the 685.6. This is where I will see the covering coming from. Definitely probably take it to the 689.4. Let's be patient and see what happens. Check the news. My trading view chart. You can clearly see where I want to get my call. And if anyone has any plans, please feel free to put them in the chat. The chat is open.
Now, George Kurtz, we're not doing that. We want to work with someone. Good, we'll work with them. That's not what we're about. And yet, George and a lot of the other crowds, like the multiple, look at that, it's so horrible. The multiples have been shrinking in part because people say, well, it's just a matter of time before Anthropic bombs them too. And Anthropic being the existential player in this business.
Right, in terms of its reach into the enterprise, a company that recently raised $30 billion at a, I think, roughly $350 billion value, expected at some point to come public, unclear whether it will be this calendar year. And in any number of appearances recently, Dario Amodei indicates, I mean, the growth there is incredible in terms of how much the money,
right.
From nothing, from $1 million to $1 billion to $10 billion to now in January billions.
And that's like the existential. I mean, these guys code. The code writers aren't there. The actual product is writing the code. I mean, Carl, my problem is there any way that he may be a little more big hat, no cattle? I looked through his predictions over the course of the last couple of years about what's going to happen, and he was wildly off on the predictions.
Yeah, well, I mean, his great interview with him in the Times over the weekend where he says AI doesn't need to be some kind of knowledge god. All it needs to be is as good as a really smart human, and then you put 100 million of those into play, and as he says, you end up with a country of geniuses. Well, that's where the results come from.
Well, I mean, if you go listen to Nikesh last night on Palo Alto, he says, look, it's right 95% of the time. This 5% time, is that enough? And the answer is no. Jensen says it's only right 90% of the time. If I'm a fifth-year associate and I hand in something that could be wrong, I'm just going to lose my job.
Potentially will have to have a human in place. But let's not forget the exponential, which, by the way, Amodei says we're coming to the end of. But the growth has been so dramatic in these models, in the pre-training and training, and now RL and inference. I mean, it just keeps going like that,
right,
Jim.
and Amazon would tell you, if Amazon were here, they'd say, you really don't want us to spend and have all this business go to Google? Is that what you're into?
No, but my point is that to the extent there are mistakes still made, there are fewer and fewer. And over time, they will get to close to 100%. It's still a real threat. You may be right, and I hope you are, when Amodei raises, because he, amongst the leaders of the various AI companies, is the most outspoken in terms of the potential threats.
But it could be so
and by the way, has
wrong.
run afoul potentially of the current administration and the Department of Defense or War, that it's now called.
Well, it's about $200 million, but much more at stake there if the president decides to discipline someone, like a university that's too liberal. Well, you've got your AI that's too liberal.
Oh, like no other government around the world is going to do the same thing? They're all going to pick their favorite player.
I know.
Yeah.
But look, I mean, the mistakes, you can find the mistakes so easily. A friend of mine's daughter works at Reebok. So at one point, I was a Rockport spokesperson. I don't know why. They saw I liked them. They didn't pay me. I had a big picture of me, very Stalin-like, in front of Columbus Square. So I said, look, I'll go to Gemini. I'll tell you exactly what. So I put in Rockport and Kramer, and I get Jim Kramer from Rockport, Massachusetts, has long been a spokesperson for Rockport, unofficially. And that he follows all the Rockport sports teams. Huh?
Yes, Jim. Huh? There are still mistakes made. That does not mean.
But this is like it just wanted to please me.
That we're moving very quickly, and that it is replacing certain functions. Listen, is Musk going to be right that there's going to just be digital human emulation? That basically it's going to emulate everything humans do in front of a computer? Maybe.
We just
not yet, but soon. Maybe.
Dull, dangerous, okay, right, and dirty. That's all we want. The 3Ds, and that's what Jensen taught me. Listen, we're going to automate the dull, the dangerous, dirty,
dangerous, and dirty.
That's what we want. The jobs nobody wants.
None of them know what's going to happen. You don't know. I don't know.
Oh, none of them know.
No, none of us know.
Jensen doesn't know.
No, he doesn't.
He said he looks at 20 years and he works backwards.
He doesn't know. He's taking a very educated guess based on the fact that he has more experience than virtually anybody.
Let me just text him. He just said, there's a man to my left who says you don't know.
Well, wouldn't he admit that he doesn't know?
I think
he can't with 100% certainty. Come on.
No, he would not, because he's very humble. He's a humble person.
Yes.
As opposed to Dario. You're not humble, that guy.
You don't like him.
I like the guy that Dario, the guy is the butcher in Italy. He's got
Our AI
three-star
future is
Michelin.
being led by Jensen Huang, Elon Musk, Mark Zuckerberg, Sam Altman, Dario Mode. Those are
right. And
right. Who am I forgetting?
He's got the
Sundar
business to
Pichai
business. I like him more than
and-
anyone.
Yeah.
I like him. I've not had the pleasure of meeting him.
And Satya Nadella.
Probably
There
now
it is.
just ended
There it
that.
is. They are leading us into this
Okay,
future.
so how is Copilot doing?
Not well.
And why?
Not well.
You can't talk to Copilot like you like to.
That may be true, but people are adopting the tools of Anthropic,
I think
perhaps more so in the enterprise
Yeah,
than Copilot. And that's been an issue for Microsoft. One reason why
Look
that
at that
stock
loser.
is down 17+% this year.
Bring Ballmer back. Not just kidding. Ballmer's my friend at college. It's okay.
Yeah.
Jesus. So I'm going to give a prediction. Of the ones that we've been talking about, the one that has to do the biggest refresh, redo, will be Microsoft. They have to come out with something and just say, listen, Copilot was nice. Like, remember Gemini? Before that, it was like the Bard.
It's interesting. Kalanovic, formerly of JPM, did a poll yesterday online, and he asked which hyperscaler is most likely to cut CapEx. And I'm pretty sure Microsoft came in first.
Cut CapEx.
Would you agree with that?
Microsoft has to do. They ought to step back, figure out what they're doing. That they were proud of 15 million subs. I mean, are you kidding me? Proud of 15 million subs?
Yeah.
They got 1.5 billion base. Can you imagine if Tim Cook came out and said, you know what? We have 15 million people who take Apple, I don't know, the insurance. You know what we would say? We'd say, what is he doing wrong?
It's a disappointment. Doesn't mean they can't figure it out.
That's what I'm saying. I'm saying
Well,
there's a
if
scope
you're
for it somewhere.
Ben Wright's, you might argue you don't have to charge extra for it.
How many times have I had that note in my cell phone this morning?
Well, it's reflected in what's happened to the stock price just this year, of course.
It's
and it is
Copilot.
down the largest amount by far of all of the mega caps.
And that's a great company. No?
Guys,
You don't think it's a great company?
It is a great company. Of course it's a great company.
Down 17% for the year. The year's young.
Yes, it is, Jim. Yes, it is. Who knows what exciting things will happen this year.
YOLO over there.
Bring it on.
All right, I'm going to talk a little sports, guys, in the Faber report this morning
Good.
because it's gotten a bit of attention this morning. MSG. Now, it can get confusing because there are any number of entities already that have been created by Jim Dolan in terms of housing various assets around Madison Square Garden and the teams and the venues and everything else. I'm talking MSGS, which is the Knicks and the Rangers. And why am I talking about it? Well, this morning we learned from the company that they are, and their directors, their board, has unanimously approved a plan to explore what would be the possible, what they're calling spinoff, but essentially split and spinoff of the two teams into separate publicly traded entities. The Knicks and the Rangers. Why is the stock up? Well, these things had about a $7 billion overall value, that is, when they've been together, and I think there's been some frustration on the part of the company and its board that the value of the teams was not being properly reflected in the overall value of the company. And many who own the stock certainly might agree with that. Now, this doesn't mean, as many may believe, that the teams are going to be sold. The Dolans are going to part with the Knicks or the Rangers. Perhaps, if in fact this plan goes forward, it seems likely, there will be a sale that monetizes some piece to sort of show the market. But when you look at where CNBC has these teams valued, you can see why any plan to separate them would be applauded. The Knicks alone are valued at about $10.1 billion, and the Rangers at $3.8 billion. And to give you some sort of back-of-the-envelope math, I mean, the Lakers are the most recent team to trade. They sold for over 10, I think it was, about 19.2 times revenues. People who own the stock tell me they'll take the multiple down for the Knicks to 16, but that does get you to 10 billion. And very similarly, the Rangers at 11 times revenues gets you to 3.7 billion. So not very different values than what CNBC has in terms of our sports valuation metrics that we use. And obviously, when you combine that, you get to a far higher number than is currently the market cap of MSGS, not to be confused with MSGE, which is the actual facility, the Madison Square Garden, not to be confused with the Sphere, which is the Sphere in Las Vegas. They've actually created a lot of value through spinoffs.
Cool as all
the
get out.
Dolans. going back to the decision to sell Cablevision, which was also a very good one.
That was another good one.
Hasn't been good for shareholders since, of course, but that is those who own the company that bought it. But yeah, so that's where things stand. We'll see, in fact, whether they move forward with it, as seems very likely, but you can see the reaction in the stock price this morning.
I thought that was a great story.
Yeah.
Because people love it. People have known that the Knicks, you can get courtside. It costs a fortune. More than any other place, how people thought they weren't worth more. I once was offered a ticket to go courtside, and I went to compliance, and they said, "Are you out of your mind?
Yeah.
You can't go to that unless you want to write a check."
No, the number's right. You could fly to Paris and have a beautiful weekend and stay at a really nice hotel for the price of one courtside seat.
Well, if it was that Knicks beat down of the Sixers, it would have been worth every penny.
No, I know. Well, actually, big game against Detroit tomorrow night, actually, at the Garden, and I'm sure it will be very exciting.
Are you going to transition to Paramount?
Would you like me to?
Well,
sure.
there's a good,
by the way, Paramount
good segue.
once owned the Knicks. You remember that?
And Zaslav has great tickets.
Yes, Zaslav has good seats as well. Not really seeing much in the shares of Warner Brothers, although they're holding their own, in fact, up 0.12% this morning. Of course, we are just at the beginning of this very short period under which Warner Brothers and Paramount are negotiating, or we believe will be negotiating. Don't have a lot of follow-up reporting for you at this point, but certainly hope to in the days ahead. Did have an interview yesterday on CNBC with Ted Sarandos. Sorry?
Was that yours?
That was not mine.
Okay,
that was not
Sarandos
mine.
Was just so clear on this. I just said
mine.
game, set, match.
Well, you mean what? That they're not going to raise? What?
No,
what did you take away from the interview?
I want the money cash on the barrel, and he's giving me cash on the barrel. I think that Paramount's giving you 7-8 times leverage.
Yeah, but who cares? You're getting cash.
Well,
you don't care about what they're levering
there's a risk
at.
that deal won't be closed.
That is the concern of the Warner Brothers board in terms of the LBO structure, Jim.
That.
But it's been very rare that we ever see a deal collapse when they have a contract and a $5.8 billion reverse termination fee. Maybe they'll have to raise that. Maybe they can somehow guarantee that if, in fact, the finances at Paramount continue to decline, Larry Ellison will provide more equity to the company to make sure that the banks don't pull, but it seems highly unlikely.
Okay.
The question really is around, in many ways, antitrust. And Sarandos says that they have as good a path as Paramount. Paramount counters and says, no way, not here in the U.S., where they believe they will be deemed a monopoly, and not overseas as well, where there are many who do agree with Paramount that, in fact, the EU is going to be a significant impediment in terms of using entrenchment theory, basically identifying streaming as its own sector, and saying they will have monopoly power in some way. The man who runs Netflix disagrees. Take a listen.
This guy does not have a faster regulatory path. I don't know why the Ellisons would insinuate they have some inside track into the Department of Justice, but I can assure you they don't. And that in terms of our regulatory in Europe and around the world, we are known entities and trusted entities with all the players in Europe. And in fact, our deal, by not acquiring Discovery Global, we don't disrupt the European broadcast system at all.
All right, more to come, Carl, as the week moves ahead, of course.
Indeed. As for bonds, pretty steady action as we got the 10-year close to 408 this morning. Durables were pretty good. In fact, core cap good shipments, Jim, year-on-year December up almost 7. That's going to be good for GDP on Friday.
Well, there are compelling stories about growth and compelling stories about lower inflation, and that's terrific. I just don't know how long the latter is going to stay, given oil, given the fact that the cattle is really sticky, and we're starting to see a lot of things about construction costs going up. It's okay to be positive. Andrew Ross Storkin was talking about how positive the growth is he's just right out there.
We'll see. We're going to head into tax rebate season, which often helps equity flows.
Yes, it does.
We're back in a minute.
Good morning and welcome back to Squawk on the Street. I'm Sarah Eisen. Today from Mar-a-Lago in Palm Beach, Florida. Why? Because there's a big financial conference here. It is the World Liberty Forum. Remember, World Liberty is, of course, the firm founded by both of President Trump's sons, Don Jr. and Eric Trump. We will speak to them exclusively at the top of the next hour, but it goes well beyond crypto. They managed to get CEOs from Goldman Sachs to NASDAQ, hedge funders like Dan Loeb, Philippe Lafont, all talking about outlook for the economy and American policy. We will also, of course, talk crypto. Key players here, Brian Armstrong, exclusive, the CEO of Coinbase, in a rare conversation with Senator Bernie Moreno, who, of course, is one of the regulators. We'll talk to them about where the Clarity Act stands. This is, of course, the Market Structure Act for Bitcoin, and much more. We've got exclusive coverage for you. It all starts at the top of the next hour of Squawk on the Street.
Let's get to Jim and Stop Trading this morning.
Doug Yearley, one of the great CEOs, people might know him from one of the largest home builders, Toll Brothers, once again delivers a great quarter. What's really important is the number comes out, everybody looks at it and says, oh, weak quarter, bad quarter. They don't understand the home business. This is a man who keeps the gross margins good despite all the costs we keep hearing about, as produces the finest homes in the country of any of the big home builders. And it's just another one of the great quarters. The only misfortune is he's never been able to get that multiple to 13, 14, it's 12, but that stock's going higher. We have a very good housing market, and people keep selling these stocks. Very good housing market in anticipation of Warsh.
Ah, yes. Well, the 30-year fix down to 617 today.
Well,
permits were the best since July.
Look, I think that you got to be long something at home building because of Warsh. You have to. And I don't know, Kevin. I don't know the nomination. Everyone says great guy, but I know he wants rates lower.
Jim, it's so good to have you back.
I'm so glad to be back. I hated not being able to see. It's a tough thing.
Yeah,
And it's tough.
probably not good.
Plus, viewers like the glasses a little bit.
They
Yes,
do?
they do.
Yeah, it's nice.
Yeah.
Studious.
All right. Next I got to do is I got to get some lenses.
There's a look at the market so far.
so great.
We'll see you
David,
tonight, Jim.
appreciate
All right.
Welcome to Squawk on the Street. I'm Sarah Eisen, joining today from the World Liberty Forum, Mar-a-Lago, Palm Beach, Florida, along with Carl Quintanilla and David Faber, live from the New York Stock Exchange. Coming up this hour, an exclusive conversation with World Liberty Financial co-founders Donald Trump Jr. and Eric Trump here at the forum as the crypto complex remains under pressure after a brutal start to the year. Plus, we will speak with Coinbase CEO Brian Armstrong and Ohio Senator Bernie Moreno about the latest developments in crypto regulation, prediction markets, and much more. Guys, I'm here today, and here's a fun fact for you. The first ever live show broadcast from Mar-a-Lago, better known here as the Winter White House. And that's because World Liberty has hosted quite a big financial forum. It's not just key players in the crypto industry. They've also had CEOs speaking. I'm doing an onstage panel with David Solomon, the CEO of Goldman Sachs. They have the CEO of NASDAQ here, Dina Friedman, and the New York Stock Exchange. They have Congress people and senators here as well, the regulators, including the CFTC chair, fresh off of that announcement that they're going to back the predictions markets companies against states on regulation. And the goal is to talk about crypto, but also to talk about American policies and growth. There's also some discussion about how to preserve the dollar, for instance, as the world's reserve currency. But of course, it's not without controversy. The last time World Liberty, this company that has been founded by both President Trump's sons and Special Envoy Steve Witkoff's sons was in the news was this Wall Street Journal report that there was a deal to sell 49% of the company to an Emirati royal after President Trump was elected, raising questions again that the Trump sons have been answering for the last few months now about mixing sort of the presidency and those interests with some of the Trump family interests. We'll get to that, but of course we'll also get to the price of Bitcoin, which is now down more than 20% for the year. This was supposed to be, the golden era for Bitcoin and for crypto. The Clarity Act was stalled in Congress after Brian Armstrong, who we are going to talk to, the CEO of Coinbase, came out surprisingly against it. So a lot of hot topics around the industry, but also in general, you won't be surprised to hear, Carl and David, that the folks here are very optimistic about what they're seeing from Washington, about what they're seeing in the economy, what they're seeing in capital markets, and of course in technology and AI. And those are all hot topics on the agenda as well.
That's a big show, Sarah. Look forward to a lot more over the next couple of hours. We'll see you in a minute. Let's get to the market this morning as well as stocks try to build on yesterday's comeback. And NASDAQ is up almost a full percent. We're about 15 points shy of 6,900. Anastasia Amoroso is with us this morning here at Post 9, Managing Director and Chief Investment Strategist at Partners Group. It's great to have you back, Welcome.
Good morning. Good to see you, Carl.
I was just looking at sort of Vanguard ex-US, up almost 10 for the year.
Yeah.
We're up less than 1 for the year. I think one of the phrases I heard today is ex-US is rallying, US is churning. And I'm wondering what changes that.
Right. Well, I think there's definitely some consolidation happening in the U.S. because of this rolling AI scare that we had. Having said that, I do think the fundamentals of the U.S. economy are actually quite robust. And I agree with Sarah's sentiment there from Mar-a-Lago that there is a lot of momentum. But I do want to go over to Europe, for example. And, it feels like that region gets neglected pretty often, or it ends up being a trade. But I think something is really different this time around for Europe in particular. And I think Europe is really starting to step up its actions to boost its resilience. And I mean that in several different ways. I mean that in terms of defense spending, and for example, the commitment to 5% of GDP spend on defense in Europe. You can see that coming out of Germany, for example. You see the industrial goods orders really picking up there, and some of that is routed towards defense. So that's really sort of a new engine of growth. The other thing is we talk about trade deals in the United States, but who else is cutting trade deals? Is Europe. Europe is actually on a mission, I would say, to strike deals of its own, and they just did a monster deal with India, essentially cutting tariffs on 96% of the European goods going to India, which is the world's 5th largest economy, which is the world's 3rd largest market, and Europe now has access to that. So that's really positive. And then there's the Northern Europe versus Southern Europe story, and the fact that if you look at Spain and Portugal and Italy, more services oriented, more consumer oriented, and so those economies are sort of insulated from the exports that have been disrupted by China. So you put all that together, and we've been long-time investors in Europe, but I think there are more cyclical reasons to be excited about it.
The story about Europe in many ways has been muted growth as a result of suffocating regulation, for example. Yeah. And they say it themselves. I mean, Draghi or some of the other key leaders over there have talked about this. Are you not continue to be concerned that even though there are signs of growth, that ultimately they won't really be able to gain traction?
No, it's absolutely a concern, but I do think it's a concern that is well acknowledged and by a number of European leaders. And I do think the Draghi plan, the Draghi proposal is the reason why we see sort of this buildup in resilience in Europe. So look, time will tell whether it's successful or not, but the fact that we're seeing tangible signs to us is really encouraging. I will also say, David, that, I think this is the time
pretty
for
work, team.
It's not Europe or U.S.
Dr. JB, you're a
or
bad
Asia.
boy.
It's all of those things together because the biggest macro shift that we have is it's about localization.
Big money, deep in that, man, with that 682.
Making sure you have exposure to the
domestic
big
economy. Money made off of that.
Don't abandon the
686. 8 is my area.
You mentioned some of the weakness in software, and I was just looking at the worst Dow stocks of the year so far. Salesforce, Microsoft, IBM, Amazon. There's a UNH in there somewhere. You think there's room for a bounce on some of these IGV names at least?
First profit target 689.
Here's the thing that broadly encourages me still about software. First of all, valuations have reset a lot.
685
earnings
entry,
expectations, I would say, have reset. But if you look
target,
at earnings growth expected for software this year, it's still running about 13% year over year. So that's still solid. But maybe this is the most encouraging thing for software is margins.
JB, we already got to the
gross
money
margin
already.
for software, which means that if you're worried, if you're a software company, and if you're worried about agentic
Special shout
AI
out to
coming
him.
for you, you're likely redeploying some of that extra margin into innovation, into adaptation. So that's why I don't think we just can discard all of software is dead. It's certainly not now, and it's certainly not all of it. So I think some of it is investable, but you really have to think about whether there's a moat. You know, is it an infrastructure layer software, for example, which still plays well in the era of agentic AI, or is it an application where somebody built a user interface, and the problem I have with that is that that can be immediately disrupted with an agent. So you really have to distinguish there. But I do want to add, Carl, that this has been an asset-light story for the markets. That's what propelled the markets higher, it seems like, for the last 10 years. But maybe we're shifting to an asset-heavy story for the markets. And if you look at the performance of industrials, defense, housing, energy, you know, those things cannot be quickly disrupted by agentic AI like parts of software can.
No, and we have seen a lot of rotation into names like that, and a lot more fear, I guess, about the CapEx spending of our biggest companies. I mean, 92% of the cash flow is now being used for CapEx at, you name it, Microsoft, Amazon, Alphabet, Meta. Is that a concern for you, or are these names that you should continue to consider, given the multiples seem to be quite reasonable when compared to the broader market and their underlying growth rates?
Yeah. I mean, I think you still can consider some of the hyperscalers and some of the Max 7s, but I would actually look at the CapEx, broader CapEx beneficiary basket. I mean, David, if you look at it this morning, we've got capital goods orders that popped at the fastest clip in six months. You've actually seen similar development in Germany, the fastest increase in about 2 years. You've got the Empire, manufacturing surveys that are all pointing to a CapEx rebound. Some of that is going to come from the hyperscalers still allocating that $750 billion in CapEx. But some of it is going to come from energy, defense, industrials. So I would actually look at those categories. And again, if there are also companies that are embedding AI, I know there was a rolling fear last week about, industrials perhaps being disrupted by AI. But those companies are thinking about what they can do with things like digital twins and AI software to improve themselves as well.
Yeah.
So physical assets with AI transformation potential.
Why? So
GDP
said he was in a meeting.
on Friday because consumption's been led by
pullback,
healthcare
though.
spending.
Still
and we'll
early.
see if that continues going into the Q4 print. Anastasia, thank you.
Thanks so much.
Still early.
All right, let's get to NVIDIA this morning. The stock is up over 2% as the company announced an expanded partnership with Meta around what
Market
else?
was looking good.
AI
Market was looking
chips.
strong.
Mackenzie Sagalis is here. She has the details for us. Good morning, Mac.
Hey, good morning, David. So yes, NVIDIA shares higher this morning after Meta significantly expanded their chip partnership, committing to millions of Blackwell and Rubin GPUs across a multi-year deal. Now, one that's tied to its ambitious $600 billion data center build-out. No dollar figure was disclosed, but analyst Ben Beharan of Creative Strategy says it's almost certainly in the tens of billions, and that he expects a good portion of Meta's CapEx this year to go to the chip maker. Meta has been an NVIDIA customer for about a decade, but this deal broadens out the scope of their partnership for AI infrastructure hardware. It's very much Meta going all in on NVIDIA's full stack. The company will be the first big tech firm to deploy NVIDIA's Grace CPUs as standalone servers, with plans to use next-gen Vera Rubin AI accelerators in 2027. That is a direct shot at Intel and AMD's home turf. Both those stocks under pressure this morning on the news. Meta, it's also incorporating NVIDIA's networking gear and Ethernet switches, but it's really that shift to NVIDIA battling it out for CPU share that's the big takeaway here. And going into earnings next week, Meta, it accounts for about 9% of NVIDIA's total revenue. So for Jensen Huang, keeping this relationship with Mark Zuckerberg and Meta locked in was critical, especially as Meta had been reportedly exploring Google's TPU chips as an alternative. Sarah, back to you.
Okay, Mackenzie, thank you very much. After the break, we've got a big exclusive interview here at the World Liberty Financial Forum with Donald Trump Jr. and Eric Trump, talking the recent volatility in the crypto market, adoption of stablecoins, and much more. Plus, we'll talk to Coinbase CEO Brian Armstrong and Ohio Senator Bernie Moreno about the latest developments in crypto regulation and much more. Squawk on the Street, special edition here from Mar-a-Lago. We'll be right back after a quick break. Welcome back. Future of crypto regulation is a big topic here at the World Liberty Forum in Mar-a-Lago. Joining me now is Coinbase CEO Brian Armstrong and Senator Bernie Moreno, Republican from Ohio. Senator Moreno is one of the leaders of the negotiations in Washington and a former crypto entrepreneur himself. Gentlemen, it's good to have you both.
Thank you for having us.
Kind of rare to have you together. I like it. So Brian, what is the status of the market structure regulation that you famously blocked from passing a few weeks ago?
Yeah, well, we're here meeting with crypto companies, bank representatives, and senators as well to see if we can get to a solution on market structure. And one of the big issues that did come up in the past was this idea of stablecoins on rewards. I wouldn't say we blocked it. In fact, nobody, I think, in the crypto space has been working harder on this over the last few years to try to get some legislation. What we did say was the current draft, we had some issues with it. I think that caused everyone to come back to the table, and there's now a path forward where we can get a win-win-win outcome here. A win for the crypto industry, a win for the banks, and a win for the American consumer to get President Trump's crypto agenda through to the finish line so we can make America the crypto capital of the world.
Were you surprised? What was your reaction when he after he's obviously been so involved in this and was so deep on it and then came out against the version of the bill? How did you react to that?
Well, look, I had concerns about the bill, still have some concerns about the bill. We weren't done. We got hung up on the issue of rewards on stablecoins, which is really, in my mind, really shouldn't be part of this equation.
Wait, can we just explain this? Like, why people should care about this? What the whole yield rewards on stablecoins thing is about?
Well, unless you own a bank, you probably shouldn't care. But because if you're an American consumer, what it means is that the cash that you hold, you're going to have competition to pay you more interest. So you're going to be able to get more money for the money that you have in your wallet or the money that you have in some sort of account. So this is very, very good for working Americans, because ultimately this is about giving Americans more rewards for being able to have cash on reserve, being able to get paid quicker, being able to transact faster, democratize the financial systems. But we're going to get this bill across the finish line. But I would say
when?
Hopefully by April. Hopefully by April.
I was going to say, because if you don't by the midterms and then the House goes Democrat, then what happens to it?
Well, the House isn't going to go Democrat, neither is the Senate. People say, well, the election were today. The election is not today. We're going to win because, look, at the end of the day, the American people are sick and tired of open borders. That's why we got elected. They're sick and tired of high inflation. They're sick and tired of an out-of-control government. We're about to see $100 billion in additional tax refunds, most of that money going to working Americans. The Democrats only have one idea, which is hatred of President Trump, and that's not a very good idea in terms of actually advancing the lives of working Americans.
So, Brian, on where it goes from here, the senator explained the whole issue of rewards for stablecoin issuers. I know the banks don't like it, right, because they see it as a potential threat to their deposits. But some critics would say you're just trying to protect your business.
Mm-hmm. If you survey Americans, 87% of them say that the current financial system doesn't work for them, that there's too high fees, there's delays, there's unequal access. And so crypto is updating the financial system. The smartest financial service institutions out there and banks are leaning into this as an opportunity. You can see on LinkedIn, they're all hiring for crypto and blockchain product managers and engineers. And Coinbase is actually powering infrastructure for 5 of the largest banks in the world right now. So the smartest ones are all leaning into this as an opportunity. This is about, it's good for Coinbase, it's good for the crypto industry, but it's also good for the banking industry to embrace innovation and adoption. America has never been one that just tries to be stagnant and protect the incumbents. We want to lean into the future and make sure that America stays competitive, because we're existing on a global stage here, right? Like China is putting out a central bank digital currency that is paying interest. There's offshore unregulated stablecoins, which are actually much bigger than the ones that are regulated within the US perimeter right now. President Trump has said he wants to repatriate these funds to build this industry here in America, and to do that, we have to have stablecoin rewards.
So where are you in discussions with the White House on moving this forward and getting it passed by April?
Yeah, well, the administration has been incredible on this. President Trump setting the tone from the top, naming David Sachs as the crypto czar, Patrick Witt, and then the Senate has been incredible as well. So they're meeting, as far as I can tell, daily on this to try to move this forward, and they just deserve a ton of credit. So all we've tried to do is, behind the scenes, be constructive, lay out potential solutions that can be a good win-win outcome for crypto and the banks. And I feel confident they'll get something done.
Is it moving forward with these rewards in place for stablecoin?
Yes, there's a small list of remaining open items, and I think that If a compromise can be found, this will get to the president's desk for a signature in a few months.
What about the price of Bitcoin and the fact that it was down last year in an up year for the overall market and has started out really rough this year, down more than 20%. Does that impact the sort of broader movement to get more done here?
Not really. I mean, crypto, sometimes it's up, sometimes it's down. Bitcoin is still the best performing asset of the last decade, right? So we try not to take a short-term point of view on that. When crypto prices are down like this, actually Coinbase is buying Bitcoin. We're buying our own stock back. We're just continuing to build in these down markets. So there's an opportunity whether the market is up or down, and we try to just take it.
Why do you think it's down so much?
People have a lot of Monday morning quarterback type theories on this. Whenever the market moves, they'll say, Kevin Warsh is an inflation hawk, or they'll say that quantum computing is on the horizon. In my view, the markets are a little bit more psychological than that. People say, I don't think there's any substantive issue, but I think other people do, and they'll want to lock in gains and move it up and down.
One thing I've heard is that quantum is going to break the blockchain. Is that true?
No, that's not true. I think that's a very solvable issue, and actually Coinbase has been very front-footed on this. We put together a quantum advisory council, and we're in regular contact with the major blockchains about a path to upgrade to a post-quantum cryptography world. So we're going to stay engaged on that, and I think it's very solvable.
Senator, I'm curious about what your vision is here for the future of crypto, stable coins, and getting them into the U.S. system in a regulated way, but also not threatening the U.S. dollar.
Well, it actually is the opposite of threatening the dollar. This is the best thing that could happen for the U.S. dollar because it dollarizes the world. It creates massive competition for treasuries, which is going to drive down our debt cost to the tune of hundreds of billions of dollars per year. And by the way, put more money in the hands of consumers. Ultimately, that's what that is. When you have people who are depositing money and they're not getting the kind of return they should get or rewards that they should get for having those deposits, that hurts working Americans. They're the ones that are suffering as a result of that. You can also have, by the way, imagine a world in which you have instantaneous payment for payroll, where payroll doesn't settle twice a month, it settles every single solitary day. You have velocity of money. The idea is very simple. Money should move at the speed of information, and that is going to happen. Let me just be clear. This will happen. That's not the question. The question is, does it happen in the United States of America, or does it happen somewhere else? We cannot lose our innovative edge, and that's why President Trump is the person who's going to make certain that America never, ever falls behind on innovation. And look, at the end of the day, you're worried about the volatility of Bitcoin, which, by the way, has nothing to do with stable coins. Wait till I talk to you about silver and gold.
Right. Well, they've definitely outperformed Bitcoin.
Not over the last 10 years.
Okay, over the last year or so.
But you would never advise your viewers to look at a 1 year before making investment decisions. This is about investment decisions over a longer period of time. And the reality is Bitcoin's just getting started. You're going to see.
You think Bitcoin is a safer bet than gold?
I would absolutely buy Bitcoin today instead of gold. And by the way, just be clear, I don't know any of that because I don't want anybody giving me grief about whether I'm objective or not objective. But if I had money to put in the market today, I would buy Bitcoin.
Well, we know, Brian, that you've been buying back Bitcoin. I do want to just, in the minute that we have left with you, just hit on what we got from the CFTC this week, which was big news on the prediction markets. The commissioner is actually here at this conference. And they announced that they're coming out swinging against these states that are trying to go after prediction markets as gambling. This, I would think, helps your business a lot, and you're part of this new council. What's your reaction?
Yeah, well, Coinbase has been building out what we call the everything exchange. So we have every asset class there, crypto, stocks, commodities. We also launched prediction markets, and you're correct. Commissioner Mike Seelig has been great on the leadership front here, coming out and stating what is already in the law, which is that the CFTC has exclusive authority over these types of contracts. And some folks in the state level are unhappy about that. This might go to various courts, may even go to the Supreme Court. But I think ultimately the CFTC chair is right on the law, and they'll win. The CFTC has the authority. There's state preemption, and so we're going to rely on that as well.
And I know you were also very supportive of this. I saw you posted on that.
Look, the role of the United States government or any government is not to protect incumbency or business models that are eventually going to be replaced. Our job is to make sure we create an environment for innovation and growth with proper guardrails, and that's exactly what we're going to do.
Who's going to be replaced?
Well, look, ask Sears how Amazon worked out for them. Ask Blockbuster how Netflix worked out for them. Our job isn't to protect business models that are just not working. Young people don't like our current financial system. It's going to be replaced. We want it to happen here in America.
All right. Well, just a little taste of the conversation going on here at the World Liberty Forum. Gentlemen, thank you very much. And I think we should also disclose that you donated to the super PAC of your of your election campaign, just for
because they agreed with me, not because I agree with them.
Yes, and also he backs, I think, most pro-crypto.
I do.
lawmakers.
I donated directly to him as well.
Okay.
He was the first crypto executive to run for the Senate, so.
So you were all about it.
Yep.
Brian Armstrong, Senator Bernie Moreno, thank you both very much. And still ahead this hour, do not miss World Liberty Financial co-founders, the hosts here, Donald Trump Jr. and Eric Trump. Coming up next, Carl.
Berkshire making some big moves in the fourth quarter. We'll bring you up to speed on some of Buffett's last trades as CEO. A read from the ground on AI demand and the impact on software when the CEO of Cadence as well joins us off of those results. We're back in a minute.
Ben, that's 689 to answer your question. He said, what is significance? What was the 689 to its significance the previous day? What? No. Above the 689 to, the bulls take control of the month. Above the 689 to, the bulls reassert themselves and retake control of the month. Right now we're in a red month. February is a red month. Above the 689.2, the bulls will regain control of the month. Very important area, which is also why coming into today, I chose that for a profit target as well.
Welcome back to Squawk on the Street. Let's get a CNBC News update. Dom Chu has that for us. Dom.
Good morning, David. So a second day of U.S. brokered peace talks between Ukraine and Russia wrapped up today in Switzerland without a breakthrough. They lasted roughly 2 hours. Ukrainian President Volodymyr Zelensky called the talks difficult and says progress was made, but he accused Russia of deliberately delaying a deal to end the 4-year-old war. The Vatican says it will not participate in President Trump's Board of Peace. The denial comes just 1 day before the board is set to meet for the first time in D.C. to discuss the rebuilding of Gaza. The Vatican was invited to join the group in January, but said today efforts to handle crisis situations should be managed by the United Nations. And Moderna says the Food and Drug Administration has now agreed to review its experimental flu vaccine about a week after it initially rejected the application. The shot utilizes the same mRNA technology used in the company's COVID-19 vaccine. Moderna says it hopes to make it available to seniors later this year. The FDA's decision is expected by August 5th. And now I'll send it back down to Sarah in Palm Beach, Florida. Sarah.
Thank you, Dom. I am joining you guys today from Mar-a-Lago and Palm Beach here at the World Liberty Forum. And with me now for an exclusive interview are the hosts, World Liberty Financial co-founders Donald Trump Jr. and Eric Trump. Thanks for having us here. It's good to see you both.
Great to be with you.
So, I am curious what you're trying to accomplish here, because it's not just a crypto conference. World Liberty is a crypto company, but you have CEOs from Goldman Sachs and big hedge fund managers. What's the goal?
I think we're trying to modernize finance. We're the most canceled people in the world in 2020, 2021. And it's really great to almost have this retribution where all of a sudden we start pushing an agenda. Our agenda was to modernize finance, to allow that to never, ever, ever happen to anybody again, and to really lead the way as America. I mean, look at the SWIFT wire transfer system. It's so broken. You can't send money. It's antiquated. It's costly. It's slow as hell. And crypto changes all of those things. It is the future of finance. We have to be leading in the United States of America, and this country is. And we have all the right people in the room today, and it's very exciting to see.
Dom, how big has World Liberty, the company, gotten? I know that there are a few businesses, but the underpinning is the stablecoin.
I mean, it's the fastest growing stablecoin in history. People understand. I mean, I think we have such credibility because of what we went through, what Eric was talking about. When you wake up one morning and there's 300 bank accounts that, the operating accounts of businesses that pay the waiter at a restaurant, just gone, canceled. We didn't get into crypto because we were on the leading edge. We got into it out of necessity. They basically forced us into it. And so, to Eric's point of retribution, to be able to come back and now, work with the best in crypto as well as the best in TradFi, get these people together to create efficiencies in a system that's otherwise been totally undemocratized and broken and inefficient and slow. To be on the leading edge of that is just really exciting. And that's what you see here. I mean, when you look at the names, and you've seen them all, you saw the dinner last night, some of the greatest minds in finance all in one room figuring how to make things better for the future. It's really exciting.
Well, you know what the critics would say. They'd say that the credibility factor is the Trump name and the Trump White House, and that everyone, is here to curry favor.
I think, the great honor here is they didn't give us much of a choice. When you had
they created this monster.
When you had every big bank in the world for doing nothing wrong, just based on the fact that we all wore a hat that said "Make America Great Again." My father happened to be running as a Republican, canceled us. I mean, I was getting these calls: 300 bank accounts, Capital One, in the middle of the night. These are commercial buildings, residential buildings, golf courses, are around the world. These aren't political entities, and they were pulling these accounts from us like we're absolute dogs. We couldn't pay our vendors, we couldn't pay employees, and so we said, listen, there has to be a better way.
They're used to being able to do that to people who have no ability to fight back. We had the balance sheet, we had the following, the big soapbox to be able to push back and to call out this nonsense. And a lot of Americans saw that, and they were appreciative of it.
And by the way,
they saw it happening to them. They couldn't get credit card processing if you were a small gun shop in the middle of nowhere because, doesn't check off the woke boxes. And so we did this out of necessity, and it was important. I think it's important for the world. And in that, I think we're creating a lot of efficiencies that we're lacking in the system. I mean, as someone who either one of us could have called any banker in New York over the last 20 years and gotten a loan for a building, and we just realized we were sort of the top of the Ponzi scheme that was banking. If you didn't have those connections, if you didn't have these things, you didn't get that benefit. Crypto totally democratizes the ability for people to transact, to do finance, to get the loans that they need for businesses that make sense. That didn't exist for everyone, and we're really glad to be able to bring that to the forefront in the market.
Still think it's going to $1 million. It's having trouble holding 100,000. It's been a rough start. This was supposed to be the golden dawn of crypto.
Well, Bitcoin is low right now, but what we're talking here with World Liberty is going to be stable coins, right? So that's treasury-backed, it's dollar-based.
Held up in the Bitcoin sell-off?
They're one-to-one to U.S. Treasuries, so they've stayed the same. It's just a simpler way to transact. If you send a wire on Friday, you don't have to wait for Tuesday to close. It happens in 2 seconds for 2 cents. You can close transactions. The banks obviously didn't love that idea because they're getting the benefit of the float of having these things, and these billions and billions of dollars sitting in their banks over the weekend collecting interest. This creates efficiencies that did not exist in that market before.
But not only does it create efficiencies, it's bringing trillions of dollars into the United States, right? Everybody wants to be on the U.S. dollar. They did a euro-based stablecoin, and only half of 1% of all Europeans want to be on that stablecoin. You know what they want to be on? They want it to be on the U.S. dollar. And guess what everybody in Asia wants to be on? The U.S. dollar. Guess what everybody in South America wants to be on and really is on? The U.S. dollar. Stablecoin is going to bring literally trillions of dollars into the U.S. economy. It arguably could save the dollar because guess what? There's a lot of countries around the world, rampant corruption, bad governments, bad currencies, massive inflation. These people don't stand a chance. They get a paycheck. They don't stand a chance. They may as well go and throw it in a fire and just burn it. Whereas now, all of a sudden, using a simple telephone, using your iPhone, all of a sudden you can buy U.S.-backed one-to-one, as Zahn said, based on U.S. Treasuries. You can buy stablecoin, and you can actually be part of the greatest financial system in the world. But that's a wonderful thing for us.
But gold has been doing well too. And I know stablecoin is different than Bitcoin, but you've been big proponents and bullish on Bitcoin as well.
We still are.
I'm a huge proponent of Bitcoin. I do think it hits $1 million. I think it's one of the greatest performing asset classes. I mean, go back 2 years. Bitcoin was at what, 16,000? Where is it at right now? 70?
Yeah.
Right? I mean, if you look at the last 10 years, Bitcoin has gone up 70% a year on average, year over year for the last decade. Name an asset class that has performed better than Bitcoin. And now, obviously, you have lots of volatility. If you don't want volatility, go invest in some muni. Go have a great time. Go invest in some treasury. You're going to have volatility with something that has tremendous upside. But I've never been more bullish on Bitcoin in my life. I've never been more bullish on cryptocurrency in my life. You look at what every one of the big financial institutions in the country is doing, whether it be Fidelity, whether it be Charles Schwab, whether it be JP Morgan, whether it be BlackRock, right? Goldman's here. I mean, go down the list. Every single one of them are adopting cryptocurrencies. They're willing to treasury cryptocurrencies. They're putting their private wealth clients into cryptocurrencies. Before they were telling them to put exactly zero into cryptocurrency. Then it was 2%. Now all of a sudden it's 5-6%, and that number keeps on climbing. It is the asset class of this generation. It's what every person under the age of 50 is into and loves, and we're just getting started. We're on the 1 yard line.
I do want to ask you about the World Liberty Corporation, which has been in the news, and there was this big Wall Street Journal report about the 49% stake that was sold to an Emirati royal family member after your father was elected president, raising questions about whether they were doing that so they could get access to AI chips.
A, my father has nothing to do with. B, it has nothing to do with AI chips. And C, we met in the Middle East the first time. Yes. There's not a person in that room, there's not a banker, there's not a fund manager that doesn't go to the Middle East and to the, whether the sovereign wealth funds of the world. They're some of the biggest investors in every fund in America. To critique the one here and not talk about the others would be nonsense. It's literally what they do. And so they have done that. They invested in it, and they've actually had already over a 4x return on their investment. It's a great investment and has nothing to do with the other. We've been dealing with the conflict of interest stuff for years. I mean, they tried all this nonsense the first time around. Frankly, it's gotten old. They were the ones that put us into this position by creating legislation to try to put us out of business. We just fought back. We weren't willing to sit in the corner, curl up in a ball and die like they would love us to do. That's not how we function. That's not how we operate. And you can see that whether it's my father or us, that's never going to happen. We're going to do what we need to do to fight back.
Right?
It's a crazy law of unintended consequences. If you look at what they tried to do when they threw my father off of Twitter, and they did the same to Don and myself and pretty much everybody else in our family. They took us off of Twitter. They took us off of Facebook. They took us off of Instagram. They took us off of YouTube. They took us off of Google. They skewed all the searches. They did everything they could to suppress. So guess what we did? We went out and we formed Truth Social. Then not too long after that, all the banks, they started canceling us left and right, every single one of them. Every single one of the big banks. They started canceling us. Guess what we did? We went out and we got into DeFi because we realized it was the future of finance. And the great irony is half of the very executives that called us back in those days to cancel us are actually in this room right now. It is a law of unintended consequences, and I think for a long time they fought it, and I think at this point they realize they can't fight it. The train has left the station. This is happening worldwide. The whole world is adopting crypto in a very, very big, fast manner, and they'd much rather be on the side of something that's clearly the future than be trying to fight it in perpetuity.
Well, I don't think the Democrats have accepted it. I mean, Senator Warren wants you guys investigated by Treasury under CFIUS.
Yeah. I know.
Senator Warren also said he was
millions of dollars
agent of Russia,
teaching
right?
Harvard for 4 minutes a month. Give me a break. That's what they're going to do. But again, to Eric's point, some of the people in this room 6 months ago, they were very anti-crypto, because they were very accustomed to their system. It worked. Everyone made a lot of money. They made fees in and out. It just created inefficiency that they got the benefit of that. Now that they realize that this is the future, that this is an avenue where people are going to go because it is better to transact, it is faster, it is more efficient, it keeps more money in the pocket of the actual user, they have no choice but to adapt. So they're going to be here and they're going to help carry that. They wanted to prevent it because that was their business model for decades. They didn't want to evolve. When I graduated from Warren, everyone went into banking. They had their same system. They've been doing the same thing for 50 years. This is leading edge technology. It's going to change the way things are, and those who are willing to adapt are going to survive, and those who won't will not.
But do you guys have conversations, friends? I mean, there are some regulators here. There are members of Congress here. There's an important market structure bill we were just talking about that needs to get through the Senate, and needs to be passed by,
Because
signed
America
by
has to
your
win. America has to win this because you better believe China wants to win it. All of Asia wants to win it. Countries in South America want to win it. South Korea wants to win it. The entire Middle East wants to win this race. We better win this race. We better win the race of modern day finance. And frankly, the banks have almost been negligent. Why is it in 2026? Why does it take you? Why can't you send a wire transfer after 5 o'clock in the afternoon? Why is it, a nice young couple wants to go out, they want to finance a house. It takes them 120 days to go through, know your customer, they pay exorbitant fees to one of the big banks to try and get a loan. By the time they get the loan, the house is gone.
If they even get it.
The dreams are shattered.
Yeah.
Why can't that be instantaneous? There's nothing in the world, there's nothing in finance that can't be done better, cheaper, and more efficiently, and more transparently, frankly, on blockchain technology. And that's what everybody's realizing. And it's going to save the consumer tremendous amounts of fees. It's going to democratize finance. And again, we're on the 1 yard line. This is, the best is yet to come for this industry.
Okay, so you're a full believer. So now we talk crypto. I just, in the final moments, want to ask about some of the other interesting business ventures, because there was big news yesterday about your investment in an Israeli drone company, for instance. What was this? What's the story there? And again, you'll have the same questions about, they're dependent on the Pentagon for sales and regulation.
Listen, I think at the end of the day, we invest in a lot of things that we believe in. Right? If anybody doesn't believe that drones is, the wave of the future, they're silly. Their eyes aren't open. And so I think there's tremendous drone technology. And listen, we've been investors our entire lives. We put money into ventures. That's what I did in a company that I believe in, and I'm really excited about it. I think it's great. And then we have the greatest real estate portfolio in the world. I think. Right before we went on air, you said this is the most beautiful room.
It's the most golden room.
It's the most beautiful room.
And
you said you have ever done an interview out of, and so we have the greatest hospitality assets in the world. The Trump Organization. We have 26 projects going up around the world, and
how's business?
We are doing incredible. The brand is hot.
The brand is hot because your father's president.
Yeah, the brand is hot because we also.
The brand's been hot for 40 years. In all fairness, my father was on the leading edge of everything in real estate. He was the first person to amenitize condominiums back when that was totally unheard of. He's the guy that's done that. And since he's been in politics for the last decade, Eric and I have been doing these things and perpetuating the thing that he started. He's not involved. He hasn't been. Frankly, he has much bigger things to worry about, and he even acknowledges that. What we do on a daily basis is not even remotely exciting to him relative to the stuff that he gets to do, these days. And he didn't get into politics because this was, the thing to do. Remember, he got in when there was zero chance to do it. They tried to throw him in jail. They frankly set up a scenario where he was basically almost killed to do this. He's doing this because he believes in America. He believes in the American people. He wants them to be able to experience their American dream. And frankly, most politicians for the last few decades have done nothing but basically ship that American dream abroad. That was our only export for the last half a century, was the American dream, as we've enriched those who hate our guts. That has to stop. To Eric's point, preserving dollar hegemony by crypto coming in there and having treasuries in these crypto companies buy U.S. treasuries, that's going to stop the BRIC nations and the others who are trying to get away from the petrodollar and U.S. dollar hegemony. And frankly, to the Democrats' point, that's going to allow them to spend the ridiculous things on the nonsense that they want to fund, because we'll actually still have the money to be able to do some of these things and have a base to borrow from. So this is about America first, and to lead the way in crypto is going to be leading the way in the future of finance.
Finally, I do just want to end on the prediction markets, which is a big topic here, because you are involved with both Kalshi and Polymarket, and we did get this big news yesterday from the CFTC in the industry's favor. So where do you see the future of this going?
Listen, I got involved in the prediction markets a few years ago, back when we had no chance of ever even coming back from the dead. We were written off as always. Because I saw what was going out there in the political sphere, actually. We'd see polling. Kamala Harris is going to win Iowa by 12 points. I'm like, man, I was in Iowa last week. I didn't see a single side. I think this is nonsense. But you understand that the polling,
you took the other side?
Traditional polling, was bought and paid for. It was designed to demoralize one side and invigorate another. It had nothing to do with actually telling the truth. The prediction markets, when people had real money behind an idea, they were going to actually vote with truth. So for me, it was about actually getting the truth out there. So I got involved before we were ever in office. We were very clear about needing the truth out there. We want the truth. That has been bastardized, that has been masked. The narratives have been created and pushed. And for the average person who doesn't pay attention to this stuff on a daily basis, they miss that. They say, well, I saw it on CNN. It must be true. It's like, give me a break. But if you're not paying attention, if you're just working hard to put food on your table for your family, you may actually believe that nonsense. For us, it's about getting the truth out there every day. And so I think the prediction markets are very important. And it was a needed fix to a broken system, yet another one.
Yeah, that's the common thread here in all these business ventures.
We fix things. We build.
Thank you for having us here today. It's a great lineup of guests, and we certainly appreciate being able to be the exclusive partner.
Great. Thank you very much.
Thank you. Eric Trump, Donald Trump Jr. Guys, I'm heading over to the stage now to moderate a discussion with Goldman Sachs CEO David Solomon, who is, of course, here. We'll talk to him about crypto and his outlook. And I'll be back next hour with more from the World Liberty Forum, an interview with the president of FIFA, who is also here, has had a great relationship with this administration and is gearing up for the World Cup in what are we, under 4 months, David? So we'll talk about ticket prices. They even have a coin, a FIFA coin, of course, because we're at a crypto conference. Back over to you.
Yeah, big summer, of course, with World Cup, 250th birthday of the country as well. Thank you, Sarah. Also ahead, the CEO of Cadence Design right here. The shares are up. Strong results from that designer of chips. Thanks to what else? Demand for AI-related chips. He'll join us next. And New York's Mayor Mamdani considering a property tax hike. He can't get help from the governor in one specific initiative. We'll have that story a bit later on. Welcome back. You can see shares of Cadence Design up almost 9% this after the company reported very solid fourth quarter results. It issued upbeat guidance for 2026. Cadence has now reversed much of the stock's drop this year amidst the broader sell-off in software or software-related names. Joining us exclusively is Cadence Design CEO Anirudh Devgan. Good to have you this morning. AI seems to be in part powering your business. I'd love to get a view from you as we start in terms of whether this is kind of something that will continue for a long period of time. You know, is it a long-lasting opportunity, Anirudh?
Oh, hi, David. Great to be here. I mean, in terms of AI, we're just getting started. I mean, I think the demand for AI is going to continue for a while. And when we talk to our customers, I mean, they think inference demand may go up by 1000x over the next 5 years. So a lot of compute has to be built and designed to support this, massive demand for AI. And then there will be multiple phases of AI. Right now we are in the infrastructure or data center phase. And I believe the next phase will be physical AI, which is like cars, drones, and robots. And then science is AI, applying AIs to deep science like drug discovery and medicine. So I still think we are in the first inning of this massive wave. And in the way Cadence participates in this is what we call design for AI and AI for design. So we help build the AI chips and systems. We are fortunate to work with all the leading companies in the space, all the Mag 7, all the leading tech companies, to help design these chips and systems for them. And on the other side, we apply AI to our own products to make them even more efficient, to get like better results, 5 to 10x productivity that drives our own, adoption of AI into our own products.
We talk a lot here about the hyperscalers and what seems to be a more focused effort to design their own chips in some way, whether it's Amazon or Alphabet or even OpenAI at some point as well. You're a part of that. I'm curious as to how you see it both as an opportunity for Cadence, but overall, in terms of whether you think any of them are going to be able to rival the likes of NVIDIA.
Oh yeah, that's a great question, David. And if you look at our overall customer base over the last few years, about 45% of our business is now coming from system companies, and 55% is coming from traditional semi companies, and they're both growing. So by system companies, I mean, the end producer of phones or cars or hyperscalers. So this is a trend that is happening for the last few years and is going to continue and accelerate, because the system companies want to optimize the hardware and software stack together. And one way to do that is a critical component is designing their own chips that are optimized to their workload. So this trend, and you can see that, of course, NVIDIA is doing fabulous, and Broadcom and Qualcomm, but so are these system companies, initially initiated by Apple and what they have done on the phone, and recently, for example, Google and TPU. So this trend of system companies, doing their own chips is only going to accelerate, in my opinion.
I know you fielded some questions from analysts about this whole era and whether the innovation is moving so fast that it almost has to involve some portfolio management or bolt-on M&A. How did you answer that question?
Well, we are a technology company first. We invest massively in R&D. About 35% of our revenue is in R&D. 90% of our headcount is engineers and computer scientists. So we always say organic is delicious. We want to invest in organic development. That's our main focus. And from time to time, we will do targeted M&A, but our focus always is organic innovation. And that also is the most profitable for our investors.
Anirudh, I'm sure you're well aware there was a debate in the capital markets and the stock market about what AI agents are going to do to many software companies in particular. I think on the call you made an argument that AI agents may actually increase the usage of your base tools rather than replace them. So expanding workloads rather than compressing them. Can you sort of fill us in as to why you think that's the case?
Oh, absolutely. Because first thing you have to remember is that not all software is created equal. Our software is used to design the most complex things humans have ever built, which are these advanced semiconductors. So these are like 100 billion, 200 billion transistors at 3 nanometer, 2 nanometer in these complex systems. So our software by nature is highly scientific. It's physically accurate, because when these chips come back, they have to work first time, and it's highly mathematical. So there's a whole range of software out there, and the software we write is actually one of the most complicated software to design these complex chips. So in that kind of software, it is important to embed AI together with it. I've talked about this for a while. The way I look at AI is a 3-layer cake, with agentic AI at the top, the middle layer, which is this physically accurate scientific software, the classical kind of mathematics, and compute and data at the bottom. So any successful product has to be optimized across these 3 layers of the cake and built together. And so in our case, AI makes the use of software much more prevalent, because the AI agents can do more explorations than humans can. Typically, when designers will run our software, they will run 2-3 iterations to optimize it, whereas the agent can run 10-20 iterations. So it's a force multiplier. AI is a force multiplier on top of this kind of complex software, and this is what our customers want, because their workload is exponential. Chips are only getting bigger and bigger, so they want this productivity that AI provides.
Anna, we're going to leave it there today, but certainly look forward to further conversations. Thank you.
Thank you, David.
Let's turn to some tax news this morning out of New York City. Mayor Mamdani threatening to raise New Yorkers' property taxes in an effort to balance this city budget. Our Robert Franks here at Post 9 with that story. Hey, Robert.
Carl, good to see you. Well, Mayor Mamdani is saying if he doesn't get an income tax hike on the wealthy, he will raise property taxes. Mamdani floating a 9.5% property tax hike on both residential and commercial properties. It would affect about 3 million residential units, about 100,000 commercial buildings. The tax rate would increase for 4 property types from 12.28% to 13.5%. So it's actually a 1.2 percentage point increase, not a 10 percentage point increase. It's very important to make that point. He said it would raise about $3.7 billion a year. Mamdani prefers to raise income taxes on the wealthy to fund his programs, but income tax changes, of course, require approval from Albany. And so far, Governor Kathy Hochul has opposed any income tax hikes. A property tax increase would need approval from the city council, which right now also uncertain as to how they would view that. Mamdani says the city faces a budget deficit of $5.5 billion. That came after last month when he said the deficit was $12 billion. His new budget calls for spending $127 billion. That would be an increase of $5 billion from the current budget. And by the way, New York City's budget would be larger than the entire state of Florida.
As it has been for quite some time, actually.
Yeah.
A budget that was in the low 70 billions when Mayor Bloomberg left office. That is a while ago, but that gives you a sense of the increase. It has been faster than inflation.
And Bloomberg also increased property taxes. We can't forget that. And there are times property taxes are the largest source of revenue in the city.
Yes.
It's about 30 to 40% of revenues. Income taxes about 15 to 20%. So, income taxes, we talk a lot about them, but in terms of pure dollars, property taxes are where the money is. The question of what impact that would have on commercial stores in New York City, and not to mention, is it in keeping with his affordability promise if everyone in terms of renters, landlords, ends up having to pay this more tax?
Also, how much coordination between the state and the city in this case, do you think? Is this something he just does on his own?
He has to do it with city council, and the statements we're seeing from city council right now are very skeptical about a tax increase on property taxes. So, we'll see whether he gets either.
Give landlords at least something back. How about repealing Local Law 11? That would save them some money.
And put all those union workers out of...
How about stopping us from having to walk through tunnels throughout the city of New York? Unlike any city in the world.
Keeps you dry on rainy days, David.
Yeah, that's... Carl, I'll never give up this issue.
I know
I'm getting nowhere on it.
Robert, thanks. Robert
Thank you,
Frank. Speaking of real estate, coming up this morning, an earnings exclusive with the CEO of JLL, how they're combating the potential AI disruption to the commercial real estate sector. That's when Money Movers begins in a minute. Good Wednesday morning. Welcome to Money Movers. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange. Today, a slew of eco data crossing the tape, but what could it help build consensus for regarding rate cuts later on in the year? Former Fed Vice Chair Clarity is going to join us with his expectations.
Plus, commercial real estate amongst the sectors that's been caught up in the recent worries around AI. Fears, of course, that it won't just compete with traditional brokerage agents, but could actually slash office space demand, for example. We're going to discuss those fears, the quarter, and a lot more of the CEO of real estate service firm JLL.
And the U.S. bracing for hopefully a big tourism boost as the host of this summer's FIFA World Cup. We'll dig into the potential economic benefits with the president of FIFA later on this hour. As for markets today, NASDAQ up for a second day in a row. Nice 1% plus gain. Got the VIX back below 19. Sector-wise, getting some help largely from consumer discretionary and technology as some of the defensive sectors like healthcare and staples are in the red today. Let's bring in Rob Rowe, Citi Research Head of Global Strategy here at Post 9, talk about sort of this churning action that we've had last few weeks, although reclaiming 6,900 is pretty constructive.
Yeah, I think it is. Obviously our call from the beginning of the year is very bullish. We thought 7,700 by the end of the year on the S&P with 320 earnings. So we think that we'll start to see a lot of more adoption and productivity as we go along. And we also have seen a very resilient economy so far, especially in the U.S.
Right. So worries about the labor market, for example, unfounded?
We do worry about the labor market. We think it will continue to soften, and actually we think that will drive the Fed eventually to do at least 3 cuts in the year. So we're looking at that more in the second half of the year than the first half of the year. So we should see a little more continued labor softness. We're still in this no fire, no hire mode, although we're starting to see some layoffs. I don't know how much that's associated with AI in general yet, but we are starting to see more productivity and improved labor productivity right now.
Right. I wondered if clients ask you, given how the economy is being run pretty hot, right, with this fiscal stimulus now coming into play on tax refunds, depreciation, Congress is there, depreciation or deregulation from the White House. How does that square with rate cuts later in the year?
Well, I think the big key question there would be inflation, and we still think that inflation will be tame. We're starting to see a little more goods inflation, and it's probably more associated with tariffs. We don't know whether that's going to be long-lasting, but what's promising is that services inflation, which is actually the larger percentage of that, is actually declining. So if we see inflation stay constant or even decline from here, and we do have labor softness, we think that can drive, even with a growing economy and a strong industrial bent, we think that we can still see rate cuts.
So you think this rotation that we've seen into value, for example, and healthcare and staples for a minute there, you think that's going to be short-lived?
No, we think that it can broaden out. But our big premise there is mostly productivity due to AI and innovation, which we think we'll start to see. I would say that our expectations shouldn't be that it's going to happen immediately, that it could happen over the next 3 to 5 years. But if you look at labor productivity contribution to GDP, and you track that versus where we were during the internet innovation, we're actually ahead of schedule. That eventually contributed 1.5 to 1.6% to real growth. Right now, we're contributing somewhere north of 0.6. But that's ahead of where we were during the internet innovation.
And you expect that to increase, I would guess, but it's unclear over what period of time?
Exactly. So we think it will increase. Again, the pace is faster than it was at a previous cycle like this. And we think it eventually can contribute north of 1% to real GDP and over a few years. But that could happen over the next 3 to 5 years.
Right. There is a concern, of course, on the labor side of it in terms of what we may or may not see when it comes to these efficiencies actually also resulting in widespread layoffs. Again, that's a concern. We don't know what's going to happen. Do you share that concern, and or how would that color your overall view of the macroeconomy?
It's going to be specific. It's almost going to be very sector specific on whether we see certain job layoffs. I think with any transition like this, we should expect to see some, and that could continue to have labor softness. But profitability and productivity will improve. So we'll go through a period like that, the extent to which it's hard to say right now.
Gold is stubborn at 5K. I don't know where your targets are for gold, but I wonder, does it signal worries about stress at the long end or persistent inflation or some kind of eroding of America's stature? around the world?
I think it's very much related to dollar cheapness and to fiscal deficits around the world. I think it can hold here, but I don't know that I can see it rising much higher than where we are right now.
And likely, silver is more of an industrial play, but similar thoughts on silver?
Silver, yeah, we do have similar thoughts on silver. It's the same. Where we love is metals, actually. We like base metals, actually, in terms of aluminum and copper, given the continued investment in AI and infrastructure.
Right. Well, certainly some of the durables and starts activity today was surprisingly good.
It was very encouraging.
Yeah.
Yep. And we're seeing a little more improvement in manufacturing, so that should help.
Watch the ISMs. Rob, thanks as always.
Thanks.
Good to see you.
Pleasure to see both of you.
All right, let's turn to Palo Alto and the stock price as well. It's at the bottom of the NASDAQ and the S&P this morning. Seema Modi has more on the read-through for the company's quarter. Seema.
Well, David, on the earnings call last night, CEO Nikesh Arora reinforcing this idea that large language models are additive to Palo Alto Networks' business, helpful in classifying data, yes, but also adding that they're not always right, and that the 5% of the time they're not right, that opens the door to a bad actor. Now, on the broader concerns around AI, Arora said he was confused as to why the market is treating AI as a threat to cybersecurity, adding that as AI becomes more pervasive, there's a new class of risk that simply did not exist before, so sort of reinforcing the need for Palo Alto's software technology. The company also disclosing that following its a multi-year 9-figure expansion deal with a leading AI model provider. The assumption here, guys, as JP Morgan notes, is that this is OpenAI. So that is raising questions about OpenAI's deal with Datadog, which provides a similar service to Chronosphere. You'll see Datadog shares are trading down at this hour, as is Palo Alto Networks. Its earnings guide did come in lighter than expected. Goldman Sachs believes the stock reaction reflects the limited organic upside in the second quarter, coupled with some moving pieces tied to its recent acquisitions. The company has been, guys, as we talked about yesterday, on a mega acquisition hunt over the last 12 months.
Definitely off the session lows this morning, Seema, but I wonder, does it throw a chink into the armor of that argument that somehow cyber was protected from this whole rotation?
You know, the premise on the call, the whole idea is that that attacks are becoming more sophisticated with AI. And so what Palo Alto is saying that we're going to own more of the security stack and provide sort of the end-all solution for enterprises. And they're doing that, yes, a lot of it through inorganic expansion with 3 major deals, from Chronosphere for $3 billion, CyberArk for $25 billion, and then a new one announced yesterday was Koi, an Israeli cybersecurity agentic security solution company. So they're thinking that this is only going to help them become stronger and more efficient in their ability to realize the attacks before they come in. We'll see if that works out over time. I would point out that JP Morgan says that today's drop presents a buying opportunity for this specific AI beneficiary.
Seema, thank you. Seema Modi. Still to come this hour, the CEO of commercial real estate giant JLL is with us. It's an earnings exclusive. The shares, as you see, caught up with the rest of the sector in a sell-off last week. That was over broad fears of AI, but are rebounding after earnings. We're going to get to that next.
Plus, former Fed Vice Chair Clarida is with us. He'll lay out some of the risks that AI poses to both the Fed and lower rates as Money Movers continues.
Welcome back to Money Movers. Check out shares at JLL. You can see up almost 5% this morning. This after the commercial real estate company posted a beat on the top and bottom lines. That was for its fourth quarter earnings. Follows a big move lower for the whole sector. That took place last week, of course. We talked a lot about CBRE, for example. As you see there, down 13% off of broad fears about AI, reducing the need for office leasing, replacing some of the functions of these companies. So you did see that significant sell-off. In fact, I don't think still back to where it was prior to this move today. Joining us now on a CNBC exclusive is JLL CEO Christian Ulbrich. Good to have you, sir. Let's get to the earnings themselves, because I noticed capital market services, I think, were up as much as 19%. And I'm curious, are you seeing a broad-based recovery? Is it selective? I think when it comes to sort of office and multifamily, I don't think the fundamentals, many would say, are gangbusters, even though they are decent.
Yeah, that's true. I mean, what we see is a very strong increase in the debt business that is doing really, really well. And then we have also seen a very nice recovery in other geographies. The US was up, but when you look at the transaction volume, Canada and the UK were up more than 25% in transaction volume in the fourth quarter. And so we see a geographic expansion, and we see a nice recovery across all asset classes. So I would say it's a very healthy environment we are operating in.
And what are your expectations for the remainder of the year in terms of that environment?
We think that the 2026 will be a very solid year for our industry. We have started the year strongly, and the momentum is good. And obviously, we are correlating with the overall GDP, which looks good for 2026. And then the interest rate environment is important. But on the interest rate front, what we need is kind of, at best, no movement at all, calmness, predictability.
Right. Your leasing number was also fairly strong. Is that, office, where is that concentrated? Is it the major cities? Are you seeing a broadening out at all?
Well, really, the standout market was San Francisco. All these AI companies were taking up a lot of space. So we had a record performance in our San Francisco market, but also strong market in New York. And it was across the board for us a very, very strong quarter. It was the best quarter after 2019. So you see that the office market has recovered nicely, and that will continue in 2026.
Well, speaking of AI, of course, we noted this when we introduced you. I mean, your stock, along with many others, just punished last week. A couple of different things. One, well, people aren't going to be working anymore in front of computers, and therefore they're not going to be able to need to be in office buildings. And the other being many of these tools being introduced may disintermediate you. How do you think about that sell-off and the overall proposition perhaps behind it?
Well, listen, when I was trained as a banker more than 30 years ago, I was told that the market is always right. But in this case, I think there's a clear disconnect between the market and the realities of our industry. Commercial real estate is a pretty complex asset class, and you need to have really solid, local, up-to-date knowledge in order to be able to serve your clients. And therefore, I think we will see that playing out actually as an advantage for our industry, because at our scale, the amount of data which we are collecting, we can translate that data into real favorable insights for our clients. So we believe that AI is actually enhancing our ability to grow top and bottom line.
Christian, we had a big discussion yesterday about that journal piece looking at delinquencies in office CMBS. Got to go back to 2000 to see a number that high. Should investors be worried?
I think it will play out fine. There's always kind of this underlying question, what happens with those buildings which are obsolete and the financing on those buildings? We have been moving through that pain now in the US for the last kind of 9 quarters. And it didn't really create a major upheaval, and I think we should be fine going forward as well. You have a couple of buildings which are really not having a usage going forward, and the financing on those buildings doesn't look great. but I hope it is spread out enough that it doesn't create too much of an issue within a specific organization or a specific issuance of papers.
Right. Retail looks like there might be a little activity. At least the ratio of store openings to closures looks a little bit healthy, right?
Yeah, I mean, the economy in the U.S. is doing well, and will probably do much better in 2026 and 2025. And so there is a direct correlation between the performance of the economy and retail. And we said that in previous quarters already. The retail business within our own organization has been quite strong, and that's an early indicator of what's happening in the market overall.
You combated some of that concerns around AI for your business, but I'm curious as to how you're using AI. I mean, is it possible, in terms of the broker model, will there be fewer brokers, more productivity? What are you seeing, Christian?
Well, what we are seeing is that the AI tools which we are offering to our brokers are making them more productive. The revenue per head is increasing quite significantly, which you see also in the profitability of that business. And so we have been able to grow the top line of our transactional business now over the last 8 quarters very significantly without adding any additional brokers. And I think that is a trend which AI allows us to continue over the foreseeable future.
Finally, Christian, we just had a report from Robert Frank at the end of the last hour about the mayor here in New York potentially looking to raise property taxes. I'm curious as to how you view that for commercial tenants and for overall demand in the largest office market, obviously, in the country.
Well, usually additional taxes are not helpful for businesses. I can understand that the mayor is looking for new income streams, but for the business side, that is not helpful. And so that is just an additional cost which people will have to add on top of the rent they are paying. And so it will have an impact. But overall, I'm very positive about the New York market, especially the Manhattan market.
Okay. Christian, appreciate your time. Thank you.
Thank you.
When we come back this morning, Meta's Mark Zuckerberg set to take the stand today, being questioned about the dangers that the company's algorithms pose to both teens and kids. We'll be live outside the courthouse this hour.
Plus, the president of FIFA is going to join the show, looking ahead to the 2026 World Cup, ticket pricing, the impact for the U.S. economy. Don't go anywhere.
Mark Zuckerberg is set to testify today in a high-profile social media trial in downtown L.A. Our Julia Borston is there and has more in today's Tech Check. Morning, Julia.
That's right. Mark Zuckerberg is expected to arrive here any minute and then to take the stand at the top of the hour at 9 a.m. Pacific, noon Eastern. And he'll face tough questions about whether Meta designed features to be addictive and knew about the negative impact of their features on kids and teens. Now, this will be the first time that Zuckerberg is testifying in front of a jury in this first in a series of high-profile cases about social media safety that have been called the industry's big tobacco moment. And a number of seats in this courtroom are expected to be filled with bereaved parents holding photos of children who died after social media led to them encountering predators or them becoming depressed and suicidal. Now, in this particular case, a now 20-year-old woman says she suffered from the intentionally addictive features designed by Meta along with YouTube. TikTok and Snap were named in this case, but they have settled. Now, this case is considered a bellwether because Meta and YouTube have historically been shielded from legal liability for the content shared on their platforms by Section 230. But the novel approach of this suit, focused on product design and liability, could impact the way thousands of other cases could play out. Now, Meta denies these allegations, saying, quote, the question for the jury in Los Angeles is whether Instagram was a substantial factor in the plaintiff's mental health struggles. And Meta says they're confident the evidence will show our longstanding commitment to supporting young people. But the stakes in this and the following cases are high. Not only could Meta and YouTube have to pay monetary damages, but the jury and courts might also require Meta to change features such as infinite scroll or may mandate stronger filters to prevent minors from being exposed to problematic content. Guys?
Julie, I was going to ask you, how likely is it that we're going to get into the weeds on algorithms and the types of posts that kids are being fed?
Well, I think today there will certainly be a conversation, likely citing evidence in the form of emails between Mark Zuckerberg and his various executives about whether or not Meta knew that features were addictive. The question that we've heard time and time again in this case, and Adam Mosseri, the head of Instagram, testified last week, is this question of whether Meta was prioritizing profits and engagement, which is what drives profits, over people and the impact on kids. Meta is likely to cite the fact that they've invested a lot in offering parents all sorts of tools to monitor and limit their kids' access, that they've invested quite a bit in trying to prevent this dangerous content, whether it's around suicide or eating disorders, having kids have access to that. But I think this could be a tough day for Mark Zuckerberg. He's testified quite a bit before Congress, but this is his first time testifying in front of a jury.
Julia, thank you. Julia Borston, obviously keeping us updated when Zuckerberg gets there. Let's get a news update now. Dom Chu has that for us. Dom.
Good morning, David. So a coalition of health and environmental groups sued the EPA today, challenging the government's decision rescinding the landmark 2009 declaration that classified 6 greenhouse gases as a threat to public health. The repeal eliminates all emission standards for cars and trucks, as well as power plants and oil and gas facilities. New York Governor Kathy Hochul announced this morning that the Trump administration has released the remaining $127 million in overdue funding for the Gateway Tunnel project, a new rail tunnel under the Hudson River connecting New York and New Jersey. The governor says construction will resume next week. The Trump administration originally froze funding of the multi-billion-dollar project over DEI concerns, but a federal judge blocked that move last week. And Michaela Schifrin's Olympic medal drought is over. The most decorated alpine skier of all time ended an 8-year hiatus from Olympic gold today in Italy, winning the slalom event. It was her first gold medal since the 2018 Games. Schifrin first won gold as a teenager at the 2014 Sochi Games in Russia. A huge win for the U.S. Obviously, Carl, I know you followed her career throughout the years. A proud moment for the U.S.
Yeah, that is a sweet one, and we definitely needed it, Don, that's for sure. Thanks, Dominic Chu. When we come back, former Fed Vice Chair Claret is with us on the other side of the break. Talk about some of the key risks he sees AI posing to the Fed and to rates.
Plus, we're going to get to what new filings reveal about Berkshire's latest trades. Some are Buffett's last, at least as the CEO of that company. Of course, his tenure ending at the end of the year. The top hedge funds with new positions as well. Lots of moves within the Mag 7. We're back in a moment.
Welcome back. Investors awaiting the Fed minutes this afternoon from the January meeting as we look ahead to the next read on inflation when we get Friday's PCE. Joining us this morning is PIMCO Global Economic Advisor Richard Clarida. Richard was also former Fed Vice Chair. Richard, it's great to have you back. Thanks for joining us.
Yeah, thank you.
We were teasing sort of your views on AI, and correct me if I'm wrong, but it sounds like you think it's going to have maybe a greater impact on the job market than people think.
Well, there is that possibility. Look, AI is the real thing. We're already seeing its effects through capital spending. It's early days in terms of how it will impact the labor market, but yeah, it does seem likely that there will be some sectors that will benefit and occupations and others that will face more of a direct threat, and that's obviously something that we and likely the Fed will need to be looking at.
Are you looking at charts like sort of information technology, job openings, things like that?
Yeah, exactly. You know, there's been a lot of work that we and others have done looking at the exposure of different occupations to tasks that are potentially impacted by AI, and you're starting to see a little bit of that. But there is an optimistic case, which is that AI makes most workers more productive, and that boosts the overall level of activity and overall level of income in the economy. And over a longer term, you know, in the past when we've had big innovations, there are always concerns about employment, but over the long run, typically we employ more people and we're more productive.
Well, it's going to be an issue for the Fed governors and the incoming chair as well. I'm just curious, which side do you come down on? Those who say a technological change like this ultimately will result in more jobs, or that it's different this time?
I think in the long run, and of course economists are good at that in the long run, in the long run, I think it's both more economic output and more employment. I think near term, we are seeing the effect of AI in capital spending. And you know, what's interesting about capital spending in the tech sector is that there's a lot of bricks and mortar involved in data centers and the like. So you're seeing that part hitting the economy as well. And also, I think longer term potential issue for the Fed is the extent to which AI over time changes the economy's underlying level of maximum employment.
Yeah, we were discussing core cap goods shipments this morning and what it might mean for GDP, although with the shutdown, Richard, I mean, I wonder whether or not you think some of the things we're talking about as notions are going to really be data-backed in the coming quarters.
Yes, well, you know, I have to get used to this because of the shutdowns. Typically, we get GDP numbers in the month after the quarter. Now we're getting it in the month, 2 months after the quarter, but we'll get the GDP numbers, you know. The whisper numbers keep getting revised up, and if we get a number on Friday in line with what people are expecting, I think a little known reality is that economic growth this year will actually be faster if we get that number as expected than it was in 2024. And depending on your measure of inflation, inflation's either unchanged or actually coming down. So despite all the hand-wringing in the spring after Liberation Day, the economy was remarkably resilient, it looks like, in 2025 and teed up very well for 2026.
I know you authored a recent piece talking about the incoming Fed chair, and said you expect a thoughtful policy approach. Specific to Warsh's view on the Fed balance sheet, Richard, what do you think will happen, given he's obviously raised significant concerns through the years about the size of that balance sheet?
Well, yes, you know, I've known Kevin Warsh for a dozen years, and he's very thoughtful, he's experienced. He has very articulated very specific views about the balance sheet. He'd like the Fed's balance sheet to be smaller over time, and would like the Fed to not be as involved as it is in the mortgage market. The challenge that soon-to-be Chair Warsh will face is the committee itself just made a decision in December of last year to stop shrinking the balance sheet and to start expanding the balance sheet through so-called reserve management purposes. Importantly, the size and composition of the balance sheet is not a decision for the chair to make. It is a committee decision. Now, I think there are some folks on the committee who would share Warsh's view that over time the Fed should aim for a smaller balance sheet, but it's not something that he can do day one, and indeed Secretary Besson has indicated recently that it's certainly something that he thinks he would like the Fed to think about only approaching over time.
Richard, you mentioned tariffs, and we will get some more inflation data this Friday. We might even get a SCOTUS decision. We'll see whether or not we get some news on IEPA on Friday. But people are going back and giving CPI a second look. January core goods, ex-used autos, that's a 3-year high. And I wonder if you think we can really put to bed the discussion about tariff pass-through.
Well, you are correct. I mean, there are some in particular reasons to think that some companies may have put off the decision to raise prices until the beginning of the year. You know, some companies only change prices once a year. The overall inflation numbers that we got in the CPI for January were actually quite constructive. And so I think it's probably too soon to tell. But I think the important point to remember on tariffs is inflation in 2025 either was unchanged or maybe down a bit from 2024. And wage gains were well in excess of inflation. So there were real wage gains in 2025 as well. So I think most of the hit of tariffs on prices is probably in the rearview mirror, but we may still get some of that in the remaining months.
Finally, if I could just come back to this labor question, because it is certainly one of great importance for all of us. You know, the pessimists, so to speak, talk about numbers that are frankly scary in terms of white-collar jobs that will be eviscerated. But I do wonder, Richard, how and what you think the Fed policy should be, not if we get that horrible scenario, but certainly one where we do see significant economic growth, but kind of without creation of jobs.
Sure. You know, I've been doing this long enough. I remember the so-called jobless recovery back in 1991 and 1992. So we have had periods in the economy where productivity growth has picked up and GDP has picked up faster than employment. And that was certainly the case, look, in 2025, you know, private employment growth was positive, but pretty slow, and GDP growth could be close to 3%. And so this is a period where we're getting strong productivity growth, which is welcome. Again, it's in the domain in which it's something that the Fed will have to focus on, because the Fed will need to understand, you know, if we do see slowing in the labor market, whether or not that reflects the business cycle or some of these longer-term trends in productivity.
Yeah, it's going to take us some time to figure out which is true. Richard, it's always a treat to check in with you ahead of some important data, as always. Richard Clarida. We want to get back to L.A. Our Julia Borston outside that Meta trial. Julia?
Yeah, we just saw Mark Zuckerberg enter this courthouse where he is set to testify in about half an hour. He walked in from over here. We should have video of him entering. There was a scrum of cameras. One of the reporters actually ended up getting knocked over in that rush to try to see Zuckerberg. And he's actually walked past this line of people who are arriving behind me for jury duty here at the courthouse for other cases. But Zuckerberg was surrounded by his attorneys, by a fair amount of security, and then, of course, that crew of cameras. So he's inside right now preparing to take the stand at 9 a.m. Pacific, noon Eastern. And we understand there are quite a number of parents inside who are bereaved, who have lost their children, and make that connection to the impact of social media. This trial is about one particular woman, she and her mother, suing Meta as well as YouTube for the addictive nature of the platforms themselves, the design of the apps. And there are going to be a lot of questions he's going to have to answer about whether or not they're prioritizing engagement and profits over the well-being of their users, particularly kids. Guys?
Julia, thank you. Julia Borston. The FIFA president coming up after the break, looking ahead to this year's World Cup. Of course, the impact on the U.S. economy. Don't go anywhere.
Let's get back to our Sarah Eisen in Mar-a-Lago, this time with the president of FIFA. Hey, Sarah.
Hi, Carl. I am here with the president of FIFA, Gianni Infantino. It's great to see you here. Welcome. And I think it shows, how critical sport, and especially FIFA and the World Cup, are playing in a role in the outlook for the U.S. economy right now. Is that true?
Yeah, that's true. Hello, first of all, and it's a great pleasure really to be here with you as well. It is. It's quite incredible the weight and the importance that soccer or football, as we call it, has gotten in America, but all over the world, and so it's kind of important for me and for us to be here.
So we were just talking about so tickets have gone on sale. There have been two, I guess, drafts, maybe one more final one in case you didn't get tickets. But how demand has been absolutely off the charts. What do the latest numbers look like?
Well, it's absolutely incredible. We sold, we received requests for over 500 million tickets, 508 million to be precise, for around 7 million tickets that we have on sale in 4 weeks.
508 million requests.
Ticket requests for
7 million.
7 million.
Have you ever
tickets.
seen anything like that?
Never, ever. I mean, just to tell you, in 100 years of World Cup, the first World Cup was in 1930, so almost 100 years ago. 96 years ago. In 100 years of World Cup, FIFA sold less than 50 million tickets in total. And now in 4 weeks, we got requests for like 1,000 years of World Cups.
Why is
it's
that?
Incredible. I think it is because it's America, right? The United States, Canada, Mexico, it's North America. This is certainly one element which is very important. But, we receive ticket requests from over 200 countries in the world. So everyone wants to come here and everyone wants to be part of something special. I think people generally, they want to experience some emotions and be part of something happy and feel something special. So all these requests coming from all over the world show that, well, people want to come and they want to celebrate and they want to have fun and they want to enjoy and they are all a little bit maybe tired and fed up of all this negativity that is portrayed the whole time, right?
Yeah.
We need some good news and some good things.
Everyone likes sports, and especially soccer globally. But what does that mean for ticket prices? Because, with such high demand, the prices have been astronomical.
Yes, the prices, have been, they have been fixed, but then in the US in particular, there is this thing called dynamic pricing, meaning the price will go up or down. You are allowed as well to resell your tickets on official platforms, secondary markets, so their prices as well will go up. That's part of the market that we are in. And obviously prices for some matches will go up, price for other matches will remain.
But isn't that a problem for you if they're so expensive? Because you don't want to alienate your fans who can't afford to be there.
Well, it's not a problem in the sense that the demand is there. I mean, in 77 out of 104 matches, we have 104 matches in total, which are, if you look at the audience figures, 6 billion people will watch these 104 matches, are like 104 Super Bowls in 1 month, right? So it's the equivalent of a Super Bowl. It's something special. Obviously, the price is a consequence of that. And 77 out of these 104 matches have received requests for over 1 million tickets. Every match is already sold out. We keep some tickets back for some last-minute sales, of course, but every match is sold out. We have as well $60 tickets for
I know, you had
some
to add
light
that.
ones from the first match to the last match. But what is more important, I think, in all of this discussion is what is happening with this money, right? Because FIFA is, many people don't know that,
non-profit.
It's a non-profit organization, right? So every dollar that comes in is reinvested in the game in our 211 countries all over the world, which otherwise would not have the possibility to organize football or soccer.
I've seen revenue estimates of around $10 billion. Is that your expectation?
It will be a bit more than that.
More than that?
Yeah, 11, maybe even a little bit higher.
How much of that will go toward the U.S. economy, toward sort of lasting improvement and stimulus in the U.S.?
Well, only in the U.S., the economic impact is of around $30 billion generally with the World Cup in terms of tourism, catering, security investments and so on. $30 billion, around 185,000 full-time jobs created only for the World Cup. Just imagine that the accredited personnel, so the people who have some function, from the players to the caterers or security people, there are 385,000 people, media people, 385,000 people who have an accreditation during the World Cup, volunteers. So it moves a lot in the economy. The government will generate, in terms of direct revenues, around 3.5 billion at least. So it has a big impact, but I hope that the impact will not just be limited to the World Cup, but
for the future.
Will be for the future as well.
So you mentioned the U.S. government actually stands to gain, and I was going to ask you about that because you have spent a lot of time working, in particular, with this administration and with the president. I think you've developed a nice relationship with the president himself. Why is that important?
Well, it's very important for an event of this magnitude, where you have 7 million people going into stadiums, where you have maybe 20, 30 million people coming to the US on holidays and to celebrate, where you have 6 billion people watching. I mean, during 39 days, the duration of the World Cup, every news in every country of the world will start with what is happening at the World Cup. So to organize such a big scale event with fans coming from 200 countries in the world, you need to, of course, collaborate very, very closely with the government. It's impossible otherwise.
Yeah. We're showing the video of you actually giving him the Peace Prize that you presented him with at the Trump Kennedy Center.
Yes.
And you received some blowback for that, and that you were politicizing, the World Cup and FIFA by cozying up so much to the administration.
Well, I don't think I'm causing up, or we are causing up. But when it comes to peace, and the Peace Prize in particular, everyone who does something for peace needs to be rewarded for that. And President Trump and his administration have done and are doing a lot to get peace around the world. And they have to be, this has to be recognized. Whatever you think about politics, this has nothing to do with politics. It has to do with peace. And every peace effort has to be supported. For us, football unites the world. This is our motto, our slogan, and you cannot have unity if you don't have peace, but the unity can bring peace as well.
And finally, soccer in this country, obviously it's been growing fast, but it's not as big as it has been globally.
Yes.
Certainly nothing like the NFL that we have in this country. What are your expectations for what this might do more permanently to the sport?
It has to transform the sport in America and all over the world. This country has to become engaged really with the sport. It's not possible that the United States of America, which are the #1 country in the world for kind of everything you do, that you are satisfied with being, I don't know, the number 20 in the #1 sport in the world. You have to have the ambition of becoming #1 as well. So I really hope, and I count, and part of my job is going in this direction, that we will create here one of the top leagues in the world, having the best players in the world as well. Coming from here, from this country, coming from all over the world, and shining from here into the entire world. So we will conquer the world from America with soccer.
Yeah, very bullish. Well, we do have Messi, so that's a good start.
Absolutely.
Gianni, thank you very much for taking the time here.
Thank you.
At the World Liberty Forum, where Gianni and I are doing an onstage conversation a little bit later. The president of FIFA, Gianni Infantino. Carl, back over to you.
All right, Sarah, thanks. When we come back, some of Warren Buffett's last moves as the CEO of Berkshire revealed. We'll get to some of the names being bought and sold by some of the street's most notable hedge funds in just a minute. Welcome back. Some new filings revealing the latest portfolio moves from the likes of Berkshire and some of the top hedge funds. For that, we'll turn to Pippa Stevens this morning. Hey, Pippa.
Good morning, Carl. So the biggest funds are somewhat mixed on the Magnificent Seven, including Berkshire Hathaway slashing its Amazon stake by more than 75% in Q4, a position it first started building in 2019. Appaloosa, Third Point, Tiger Global, and Value Act also paring back Amazon exposure, although Coatue and Pershing Square increased those positions. Now, during the last quarter, with Warren Buffett at the helm, Berkshire also cut Apple by 4.3% in a continuation of recent selling, although it is still the firm's largest holding. Berkshire also picking up a new stake in the New York Times, sending those shares spiking after hours. Now, elsewhere in tech, Third Point and Viking threw in the towel on Meta, but Pershing Square revealed a new stake last week, while Appaloosa, D1, and Value Act increased their positions in Meta. A mixed bag for NVIDIA as well, D1 and Third Point increasing their stakes, while Appaloosa, Coatue, and Tiger Global cut their positions. Now, while fund managers still like financials, there seems to be a growing preference for fintech over the traditional banks. Berkshire and D1 cut Bank of America. Appaloosa dissolved regional banks, including Citizens Financial, KeyCorp, and Truist. Jana took a new stake in Fiserv, while Tiger added to its holdings in Block, Chime, and Circle. And David Tepper's Appaloosa did buck the fintech favored trend a little bit by paring back Block and Fiserv. Now, all of these holdings may have changed in the 6 weeks since December 31st, but a little bit of a window into how the smartest money is playing the market. Carl.
Pippa, our thanks to you. Yeah, very interesting, especially when you pair it with some of the reports of activism in the last couple of days regarding Norwegian or TripAdvisor or Fiserv. So we'll put that together, watching the activity of the funds. Pippa Stevens, thanks so much. As for the markets, circulating around 6,900. We managed to get above a few moments ago. VIX has been around 19. It's going to be an active 24 hours for earnings as we get into tomorrow. We'll get Booking and Dash and eBay and Carvana tonight. But of course, the big one tomorrow will be Walmart. Give us a read on the U.S. consumer. Let's get to the judge over at Post 9 in the half.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the tech turnaround. NASDAQ pacing for another solid day today. We'll discuss and debate when that space might stabilize. Joining me for the hour, Joe Terranova, Carrie Firestone, Liz Thomas, Jason Snipe. Let's check the markets. I'll show you what I'm talking about. The NASDAQ's up more than 1%. Haven't been able to say that all that much lately, but Joe, we are today. I'm wondering if maybe this is the start of a turn. NVIDIA's up 2.5%. The IGV was up 2% last I checked. Looks a little different.
So I think every turn begins with stabilization. I think that's what happened. I think you had some stabilization yesterday in a lot of the software names. We saw some of the private software companies releasing their earnings to give some comfort. Then you have some follow through today. Excellent earnings from Cadence Design. That gives you a little bit of insight as it relates to how the AI disruption is actually affecting some of these software companies in real earnings. And it's broad. It's not just software that's powering us higher today. Obviously, industrial production, housing starts really strong. So that lent itself to some of the energy names performing well, some of the economy names. But back to technology, you still have names in the technology space that are working well. Analog Devices, Micron, Ciena, Keys and onsemi, all 52-week highs today.
The point you're making in part by not saying it is outside the mega caps. Right?
Yeah.
You're seeing some stories develop outside the mega caps. The question is, Jason Snipe, whether 1 week from today is the whole key.
Yeah.
Especially for the mega caps, and that's NVIDIA.
Right.
Reporting its earnings 1 week from today. Barclays today with the masters of the obvious statement. NVIDIA, sorry, but it's true. I mean, NVIDIA, here's what they say. This is deep, so pay attention. NVIDIA could make or break big tech's so far mediocre season.
Wow, never heard it before.
You go, Barclays. You go.
So, couple things with NVIDIA. Obviously, today was the announcement of the Meta deal, $50 billion deal, multi-year deal. I think NVIDIA obviously hasn't done much over the last 6 months, only up 4%, up 2% roughly year to date, but it's bouncing today. And I think part of it is obviously this Meta deal, but I think a lot of the talk for me or kind of the digest, and I have kind of with our analysis is, there's a lot of talk early on about these TPU chips and what's going on with Gemini and other LLMs. And I think the GPU chip still is the most important beltway chip for many of the technology and innovation that is continuing to come. So clearly, like many other shareholders, I'm very much looking forward to the print. I think it will be, of course, very important for the IT space and the entire ecosystem as we've seen this current rotation.
Going in, right? We know it's important, obviously. Do you feel confident about it? And do you feel, as Barclays suggests, that this is the key now to turning this group around? Year to date, every stock's down except for NVIDIA, which is only up 1.5%.
You got it. No, I do feel confident coming into this print, because I think the other thing I will say that I think has been important for me to see is all the circular spending, all the CapEx that we've been talking about for months and months and months, and looking at the ROI and what that story is. And that's what obviously the market has kind of grabbed hold of. That's the narrative, right? What is the ROI story? But if I look at this deal with OpenAI, the $100 billion deal a few months ago, they actually have pulled back that spend to $20 billion. So I think there's been prudence with their spending, and I think that's important with the whole CapEx narrative.
Carrie, Wells Fargo says buy it into the print. Cantor today says stay calm and trust in Wong, as in Jensen Wong, as we remain at the cusp of a rack-scale supercycle.
Yeah, well.
They reflect what many others say. Is it time to buy this stock into the print?
Yeah, I think it is, and we've seen people buying. The stock's up 11% in the last couple of weeks. And remember, we had $1 trillion worth of selling that came primarily out of software companies over the last few months. That is enough to buy 3/4 of all small cap stocks that are listed in this country. And all of those small cap stocks did not go up 65%. There's a lot of money that was on the sideline. It has to go somewhere, and much of it is now coming right back into what was sold. So I think it makes sense that you start to see Microsoft move higher, Booking Holdings, that's one of the stocks we had owned, move higher across the software spectrum, and NVIDIA, which is the powerhouse, and they are powering AI. I mean, if everyone's getting disrupted because of AI, and software is going down because they won't exist because of AI, which isn't true, it's NVIDIA that's selling those chips. So yes, it makes sense.
So Liz, let's see if the stock and these other names start to ramp into that print in anticipation of something good. I'm not necessarily sure the sector's going to wait around to see what they deliver, because I think everybody assumes, how could they not deliver a good quarter in guidance if the spending ramp from these other names continues to escalate the way it does?
Yeah, I don't think the sector will wait around, and I think software probably does gain into that print. Look, over the last month or so, software's been at various levels of oversold. So we're at a place where I think it's well into the bottoming process, and there's an opportunity, especially from a technical standpoint, for upside here. And we all know that NVIDIA is the bellwether for sentiment, particularly in the AI trade. If things go well, it's just further justification that this AI spending bender, the CapEx spending bender that companies are on, and still surprising to the upside on, is going to continue and should continue. And I think that's what investors need right now to feel calmer. That being said, I don't think this will end up being rising tide lifts all ships and that we've got somehow, everything goes up from here for the rest of the year. I still think that the rotation that's been in place will stay in place, and we need some signals from sectors like financials for that cyclicality to really take shape again.
So, Joe, Morgan Stanley today says NVIDIA is still the most under-owned mega cap tech stock versus the S&P 500 exiting Q4 25 than at any point in the last 17 years. You want to explain to people who hear that and say that doesn't sound like it could possibly be true? Yeah. Everybody owns NVIDIA. Tell me why that's true.
It doesn't sound logical to me, especially because if I look at the rankings for our holdings in the ETF, it's the #1 stock on every metric, whether it's debt to equity, return on equity, revenue growth, and pure momentum itself. So I don't understand.
No, but
how
It's the weight.
it's the weighting, right?
Weight.
That's what I was getting to. Kerry, why don't you explain it? Because
let me finish my.
That's kind of where I was going with that.
So
because we talk about that. Go ahead, Joe.
Let me finish my thought.
Okay, I thought you were finished.
So the challenge has been in the fourth quarter that the financial services industry is focused on concentration risk in portfolios. If you extract that and you have an equally weighted strategy, you don't have that concern. So that is what we're running. We don't have that. At the end of the fourth quarter, with literally nothing to do with Apple, with Microsoft, with NVIDIA, you saw a large component of the financial services industry reduce the holdings in a lot of these passive ETFs, specifically related to the concentration risk. And if you believe the concentration risk is real, then you're going to carry names like NVIDIA at an underweight. And you're going to carry them at an underweight beyond the earnings of next week, because you're not focused on the fundamentals of NVIDIA, you're focused on the concentration risk rather, and the massive market cap size.
Yeah. Okay. So
pass the ball.
Thank you.
Boom to Kerry. Pass it. Boom, Kerry. You take the ball. Go to the hoop.
So if you look at Apple in people's portfolios, okay, similar case. Number one stock in the S&P. Everybody was always underweight Apple because they wanting to fill in the portfolio with more names. When you're an active manager, you don't want to say, oh, we only own 12 stocks because, you know, we're buying 9% NVIDIA, 8% Google. And you really want to have diversity because you have explained to your clients that that's what matters. In fact, there's a big study, and it was discussed in the Wall Street Journal last week, that if you had followed a policy of just owning the weight, the index, or even more concentrated over the last 15 years, you would have done better because those concentrations really paid off with technology stocks and communication services. However, it does apply. It is true that if you have 10 stocks that are 40 to 50% of your portfolio, then they do swing the value of your holdings, and therefore people own less than the weight that is represented in the S&P. But does it deserve the weight? Yes, you can make the case that it does. I mean, you know, we shouldn't argue that right now, but there are people who could argue that all these stocks deserve a higher weight than the stocks of the past in those top 10 positions because they earn more, their profit margins are higher, their revenues are higher, and they dominate to an extent that no one ever has.
And that's looking at the idiosyncratic fundamentals. The second debate really surrounds, to your point, you're told all the time, diversification, you want to be diversified. Well, if you talk to Warren Buffett, if you talk to Stanley Druckenmiller, no, they'll tell you concentration is the way to go in a portfolio. And concentration the last 5 years has actually outperformed being diversified.
Well, that's what I
for
just
sure.
said. That's what I just said.
Yeah, but so many investors can't stomach it, right? Even over the last 5 years, there have been periods where in a drawdown, you've got some of those stocks down 50, 60, 70%. Most people don't hold on through that, even though, yes, over the long term it works, but long term to many people is a year, right? They can't wait the 2 or 3 years for it to recover from.
Stanley Druckenmiller, Warren Buffett, they can wait, right? They don't need that cash.
All right, so S&P takes back 6,900. We'll watch that. Again, tech's having a pretty good day. Let's talk about Amazon because it snapped its 9-day losing streak. We were going for 10 yesterday. We didn't want to get that, so we got 9. $450 billion in market valuation, poof, over that stretch. Berkshire Hathaway, since you guys are talking about Mr. Buffett, they slashed their stake. They also trimmed their Apple stake. Morgan Stanley reiterates Amazon today as their top pick. AWS and agentic catalysts are ahead. Jason Snipe.
Yeah, finally, right, Scott? Finally. 9 days is a long time. But I think the story is obviously, you know, what we were talking about earlier in terms of the CapEx, $200 billion worth of CapEx. You know, what is the ROI meaningfully? I mean, this is up 60% from last year's number. So it's obviously a big number, free cash flow declining. But, you know, when I look to the print that we had AWS reacceleration, 24% return there. The expectation was 21%. So those are very positive numbers. They laid off 16,000 people again, over-hired through the pandemic. So they're kind of right-sizing the labor force, which I think is important. AI driving 22% of AWS growth. So I think they are leaning in the right ways. Time will tell how these numbers play out in terms of the capex and the spending, but I think that's what's been the overhang on the stock. Operation margins were also pretty good.
Carrie, what gets this stock going again?
Yeah, I think that they're going to have a good quarter, one of these quarters.
Yeah.
Something's going to really ignite the market. It's huge. It's a consumer discretionary stock. They dominate in so many of the verticals in which they now exist.
The market just can't get past the idea of how much they're spending.
You
could say that they, of course, their marketplace is, whatever. Every other part of their business, great. The market can't get its mind past the astronomical numbers that are coming from the company.
Two things will happen. One is they are going to cut costs around the rest of the company. If they're laying off 20,000, 30,000 people, those numbers add up. And number two is the multiple has come down to a point where it's starting to be a reasonably priced stock, despite formerly people thinking, oh, it's selling at 100 times, 120 times. When it's selling for 30 times, people say, maybe this is interesting. So I don't think it's that far off.
All right, let's talk Meta, because it's a big day. CEO Mark Zuckerberg, he's taking the stand this hour in a high-profile court case questioning the dangers of Meta's algorithms to teens and kids. Julia Borston at the courthouse for us, I believe in Los Angeles, with those details. Hi, Julia.
Yeah, that's right. We're here at the LA courthouse, and we just saw Mark Zuckerberg walk in behind us. We heard that just moments ago, he started facing questions about whether Meta designed features to be addictive and what Meta knew about the negative impact on kids and teens of their products. We also saw entering the courthouse to watch the trial bereaved parents whose children died after they say social media led them to encounters with predators or led them to becoming depressed and suicidal. Now, this case is considered a bellwether because Meta and YouTube, which is also part of this case, have historically been shielded from legal liability for the content that's been shared on their platforms. But this suit is not focused on the content, but on the product design, which could impact the way many more cases play out. Now, Meta denies the allegations, saying they are confident the evidence will show our longstanding commitment to supporting young people. But the stakes in this and the following cases are high, both in terms of potential monetary damages and also judges and juries potentially mandating changes to the apps. Back over to you.
Okay. Julia, thanks. You'll let us know any updates that come out of that courtroom. Carrie, does this matter to you as a shareholder of Meta?
Well, of course, all of these types of inquiries are important. Is anything going to come of this? Probably not in the near term. Zuckerberg seems to want to come to some agreement with his critics that he's monitoring and cares about social media and its influence on young people. And yeah, this definitely matters. Does it matter to the stock price? I would say not particularly. This stock has been hit. This stock is one of the stocks that has come down significantly over the last few months.
It's always hard to
it's hard to
talk about sort of societal issues and then try and turn to the shareholder perspective and think one impacts the other. And in many cases, it just doesn't.
It's just a disconnect because the investing public is not the same as the public that is outside that courthouse. Will it change anything for Meta? I would say incrementally, but not much.
Let's talk about Palo Alto. Can we take a look at that stock, guys? Because it's going to be one of the worse off performers today in a market that, as we said, technology's actually been doing okay. Morgan Stanley cuts the target 223. They had 245. Their guidance fell short. Jason, I'll send it over to you. You know, cyber stocks have been hit pretty hard, along with the broader software sell-off. This name's down 16.5% year to date. You know, I had a big back and forth on Closing Bell yesterday with Dan Ives, who was, defending it from here to eternity into the number.
Yeah.
And, here's the stock reaction. What do I do with that?
Yeah, I mean, it's significant. It's off 6%. Obviously, the stock is down 16% year to date. Hasn't traded great over the last year. It's a beat on the top and the bottom. RPO was up 23%, ARR was up 33%. I think the story for me, as it relates to a lot of the cyber stocks, and particularly Palo Alto, they just closed the acquisition of CyberArk. Chronosphere obviously is now in the camp as well. So last year was a little bit of the M&A activity, the spending that they were doing. And this year it's kind of the AI story and cannibalizing software names. And I think what the CEO did very well in explaining, AI is going to serve as a catalyst for these names. As you look at the difficulty and the terrible cyber attacks that firms are going to be potentially dealing with in the future, you're going to need a player like Palo Alto and many of the others as well, CrowdStrike, Zscaler. There's a lot of great names in the space. So I completely agree with the CEO here in saying that AI is going to serve as a catalyst for a lot of these names. And I think the market is kind of misunderstanding what's going on here.
This cyber sell-off more broadly overdone?
I'm not sure about that. And I think sometimes there's a dislocation between what the fundamental story is, which can be perceived to be excellent. In reality, it might be excellent. And then measuring where people are in terms of sentiment and positioning. I don't know. I haven't heard anyone really come on the network universally and say, we want to sell cybersecurity. It seems as though it has the enduring theme.
I hear
as
the
it
exact
relates to
opposite
software.
from everybody, including everybody on this desk.
That's where I'm going with it. So if you think about the factor of sentiment and positioning, take a look at Palo Alto. The stock currently trades $154. The 12-month price target is 210. 77% of the analyst community still have a buy rating on it. So I just think there's this degree of bullishness that exists both in sentiment and positioning. And unfortunately, people are staying anchored to that when price is actually telling a much different story.
What about Cadence? You mentioned it earlier. We haven't hit it. Let's take a look at that one. Because they beat, and the stock was performing well, as it still is, up 9%. Rosenblatt upgrades it to a buy. 360 is the number they take it to. Morgan Stanley comes down a little bit on their target to 370. So it was 385. So they just temper their enthusiasm just slightly. B of A reiterates it, a buy today, protected against AI disruption. Is that the biggest takeaway of all?
It is.
What they say, the narrative, protected against AI disruption? Because that is what we're trying as an investor class to figure out. Who has some level of immunity to being disintermediated to a large degree?
I also think it's about, can AI be additive to your business model? In the case of Cadence, in fact, it is. I think they spoke eloquently with confidence about an environment in which that, in fact, can ultimately happen. If you think of the complexity as it relates to software and the production of semiconductor chips and the relationship there, the disruption element is probably not as strong as it is in other areas like an Adobe or potentially a Salesforce. So it was an excellent quarter. EPS came in $199 versus $191. Revenue came in $1.44 billion. The guidance was higher, but I think it was the elegance of the conference call and the way they spoke about the environment and how disruption really, yes, could happen, but also look at how it could be additive.
All right, so a big earnings mover is Cadence. Here's a question for you, Liz. Are we appreciating enough how good earnings season has been? Tony Pescarello of Goldman has a note out today, talks about profit margins hitting all-time highs. While obscured, he says, by, quote, iffy price action and a ton of local noise, the Q4 reporting period has been very impressive. At its highest level, a fifth consecutive quarter of double-digit earnings growth is set to be recorded. To my eye, what stood out the most was an upward shift in S&P corporate profit margins, which rose to a fresh all-time high. Yes, it's backward-looking, and the stock market is busy processing what the future may or may not look like. I'd argue that margin expansion is an important signpost for equities over the longer horizon. I think it's a good note to jump off and talk about how strong earnings season has been.
Yes, and even to follow up on some of the software stuff, revisions for software are up 10% since fall, yet the prices are getting hit. So that's another mismatch between what the fundamental expectations are and what's going on in the market itself. But broadly, as investors, are we underappreciating how good earnings have been? Absolutely, we are. And double-digit earnings growth, not to mention revenue growth at 9%. And then if you look ahead, calendar year 2026, the expectation is 14% earnings growth and revenue of 7.5%. So I think that if the market can get its arms around the idea that earnings have continued to stay stable, as profit margins are rising, you rarely see the stock market really stay in correction or even bear market territory. So with profit margins expanding the way they are, expected still to be led by technology and then by materials, which is doing well this year, I think the cyclical story remains intact. I think the technology story remains intact, but maybe isn't as much of a shining star return-wise as it has been.
Makes sense. Then why, Joe, according to Bank of America's equity client flow trends, do you have near record outflows in this stock market? Net sellers of U.S. equities last week, near historic single stock outflows, the third highest in their data's history, which goes back to 2008, so it's not forever, but it's 2008 is what it is. Clients sold stocks in 9 of 11 sectors, led by financials, 6th consecutive week of outflows. Staples, 2nd largest ever. Industrials, tech, discretionary also saw large outflows. Earnings are so good. Liz paints a picture that many would totally agree with.
Yes.
Why are people selling stocks?
And in fact, if profit margins are strong, it helps the narrative surrounding tariffs not being inflationary, because those corporations are going to absorb the cost of the tariff in the actual profit margin. I'm surprised by that report, quite candidly. I think I would say the selling that I've witnessed is more institutional in its nature. We spoke yesterday.
They are talking about institutionals. It's B of A's clients. I mean, they're talking about
their clients.
They're talking about institutional flows, not retail.
Yeah, okay, because let's make that clear. Because yesterday,
I just made it clear.
We talked yesterday about the fact that retail was actually buying.
That's
the
true.
dip.
Right. That's why I said retail.
I think that you're seeing more institutional engagement on a faster. Well, B of A has retail clients as well.
I know, but I think we know what we're talking about. So carry on, please.
No, we don't.
Let's go.
Anyway, the institutional holding, as I said yesterday, is becoming smaller and smaller. The volatility in the market this year on an individual basis is far more extreme than it's been the last couple of years. So I think that's something that can remain a constant theme for 2026, where you see a lot of these reports where institutions are selling and retail is buying the dip.
Good word. That's why we'll make the distinction. Nicely done. All right. Speaking of buying and selling, we are going to take a break. And then we're going to come back, and Carrie's got 1, 2, 3, 4, 5 moves. Bryn's joining next with a move. We'll do all of it next. right, we have a lot of moves, excuse me, to get to. I want to start with one from Bryn Talkington, who joins us now. So we have talked, nice to see you, repeatedly about from sector to sector to sector to sector that these AI fears have, taken down. Real estate, brokers, et cetera, are caught up in that to some degree. You bought CBRE, which Josh Brown did the same in the midst of all of that upset. Real estate hit a 52-week high today. Tell me more about this name and why for you.
Trade for last week, so dumb. And these single stock moves are so extreme. And we see what's happening. The CTAs are coming in, shorting these names. It's so ridiculous. And what's ironic is CBRE had earnings last week, and they crushed it. It's like all-time earnings. They were pretty aggressive on their earnings for 2026, up mid-teens. And actually, the CEO talked about, Scott, how great they are already getting about 25% cost savings from research from AI. And over the next 2 years, their professionals are going to be able to do things they never could have done before, all because of AI. And so if you think about a company that's just embedded in the economy, this is the exact type of company that will benefit from being able to get research so much faster, so much cheaper. So I just took the opportunity to go against the algorithmic traders who should not have shorted the stock. And I just think this is a good example for investors. Listen to these earnings reports, because there's a lot of opportunity to be found when these CTAs short these stocks for really dumb reasons.
Are you looking at other things that you deem to be down for quote unquote dumb reasons in this whole software upset?
I mean, I've talked about Blue Owl's OTF many times. I think that also makes no sense. You're issuing debt to billion-dollar revenue, 300 EBITDA per year companies, and you're not looking at the terminal value. These companies don't need to go public. And so I just think I like the debt side on the software side. I think, ServiceNow, we're seeing obviously all of those insiders buying their shares. I think software as those companies are more complicated. But to me, I think the OTFs, the CBREs, just continue to take advantage and be on the other side of those CTAs when they're shorting these single stock names, because it does get just so extreme and they're very overdone.
Let me ask you real quick before I let you go, since you're an NVIDIA shareholder, and we discussed as our lead today whether, in fact, this report 1 week from today just holds the key to this market right now, especially what's been a very fragile tech space.
I don't think it does. I mean, Jensen has been out and about. He's, so talkative. You had him on your show, just 2 weeks ago. So I think we know what he's going to say. I think the market right now has just moved on to the memory space, and that's where you're seeing this big energy and these big flow of funds. I mean, ultimately what we know, Scott, is NVIDIA gets cheaper and cheaper every quarter because they continue to just be at the epicenter. But the market right now does not want this stock to give over 200. I don't think this earnings report is going to get it there.
I don't know. I mean, yes, we know what he's going to say, and we likely know what he's going to guide to, but sometimes we just need our security blanket. I mean, we get a little upset every now and again. We need the market security blanket, and in some respects, maybe he and it, being NVIDIA, are just that. Bryn, thank you. Appreciate you coming on. We'll see you soon. Bryn Talkington. Let's, Carrie, get to your moves, because you have several. Let's start with American Express. Why did you trim some of that?
It was a big position. We've owned it for years. The stock has gone from 11 times earnings where we bought it, bought the large position, to 19 times now. And we just decided to move some of that into other names, that's all.
Okay, you bought more S&P Global. Is that one of the names?
Similar.
You take some of the profits, you buy some more of that?
Yes, exactly. I mean, S&P down 25% with this wave of hitting software companies. And this can't be totally disrupted. They are the rating giant, particularly in fixed income, and that's where we're having a lot of debt selling right now. So their business is good and will improve, and we thought it was really an attractive price here.
Same as theory behind what Bryn did.
Yeah, exactly.
Right? I mean, you look at
opportunities.
Okay.
Well, you feel good about Moody's today because Moody's reported,
Yeah.
and they confirmed exactly what you're talking about.
Exactly, right.
So you bought American Waterworks. That's a new position?
Yes, it's new, but it's a name we've owned in the past.
Okay.
And it's a utility. It's a water utility. It went as high as 40 times earnings on the wave of sustainability. And as a water utility, it's the largest publicly traded water utility, and they've been expanding. And we believe that they can grow their earnings 11% roughly per year. They have 2.5% dividend yield, and the stocks come down. So we thought it was an attractive entry again.
A new name for you, and I think for the show, for that matter, FlowServe.
Yes.
New buy.
Yeah. So
record
FlowServe,
high today, by the way,
exactly.
as you look at the chart.
Exactly. Well, we think there's a lot more opportunity. They're in the business of pumps, valves, and seals. They're an engineering company aftermarket. They provide to the chemical industry, oil and gas, power generation. I think it fits with the whole theme of moving outside of just technology, although they serve tech businesses. And in fact, while it's up high, it sells for under a market multiple.
Okay. Thank you. Let's get the headlines with Pippa Stevens. Hi, Pippa.
Hey, Scott. Billionaire Les Wexner is denying any wrongdoing in his relationship with the late convicted sex offender Jeffrey Epstein. In a statement released this morning before a deposition with the House Oversight Committee, the former owner of Victoria's Secret and other brands said he is eager to set the record straight. He claims he was conned by Epstein and never witnessed nor had knowledge of his criminal activity. Epstein victim Virginia Giuffre previously claimed Wexner is one of the men Epstein trafficked her to. Crews in California are searching for 9 backcountry skiers who remain missing a day after an avalanche near Lake Tahoe. 6 others have already been rescued. The group was on the last day of a 3-day trip in a popular skiing area in the Sierra Nevada mountains as a massive winter storm hit the West Coast. And Ukraine officials will boycott the Milano Cortina Paralympics next month in protest of a decision allowing a handful of Russian and Belarusian athletes to compete under their flags. Ukraine's athletes will still take part. Scott, back to you.
All right, Pippa, thank you for that. Pippa Stevens coming up, ETF Edge. How you can keep the income flowing during market pullbacks. Dom Chu has some answers in today's ETF Edge, which is next.
And welcome back to the Halftime Report. I'm Dominic Chu with your ETF Edge today. For many ETF investors, consistent income sometimes outweighs chasing swing for the fence gains. But what are the best tools to keep income coming in, especially during times of volatility like we're seeing right now? Joining me now is Christian Magoon, the CEO at Amplify ETFs, which runs one of the largest of these types of income funds. Christian, thanks for being here with us. Let's talk about what types of income instruments we are looking at for ETFs these days. It used to just be about owning consumer staple stocks and utility stocks for those income streams, but it's gotten a lot more sophisticated in recent years.
That's right, Dom. Really a mix of high quality U.S. equities, we believe, makes a lot of sense, that are paying dividends. And then you can have an active managed covered call approach where you're tactically writing covered calls. So you have two sources of income, dividend income as well as option income. And the great news about that is when you have two engines, you have more versatility during tough markets. Also, there's some preferential tax treatment oftentimes on option income because that usually comes in as return of capital, which can reduce your upfront tax basis by reducing your long-term cost basis in the ETF.
Now, dividends are part of that story, as are the income streams from options. Where exactly are you seeing more interest these days? We talk a lot about international and global equities. Are there still dividend and income opportunities via options with those international stocks like there are here in the U.S.?
Yeah, there sure are, but you have to take a close look at those international stocks. We have a IDEVO ETF that looks at high quality international stocks that are dividend payers and then tactically writes covered calls for a 6% yield. And that allows you to still participate in the upside. Last year, that fund was up 41%. This year, it's up 12% year to date, 5-star rated. So you have to have, I think, a very close security selection process and a tactical approach to writing covered calls there. And that's what we do with IDEVO, part of our Yield Smart ETF lineup.
All right, Christian Magoon, thank you very much. We are going to continue this conversation over at etfedge.cnbc.com. Christian is going to be joined by Nick Ryder, the Chief Investment Officer over at Cathmere Capital. We'll have a bigger conversation about income and its role, Scott, in a portfolio these days. I'll send things back over to you.
All right, good stuff, Dom. Thank you for that. That is Dom Chu. Coming up, our top calls of the day. A retailer on a record run just got added to a best ideas list. Joe owns it. We reveal it next. let's do some calls of the day. Interesting one on First Solar, Joe. So it's reiterated outperform at Baird, though they're cautious into earnings. So reconcile that.
I agree with the cautiousness more than I agree with the outperform.
Okay.
Stock is down 10% since December. They're up against a really tough comp here in the upcoming quarter. You're probably going to see single-digit at best revenue growth, and I think the supply disruptions in 26 actually can be a challenge.
All right. Jason, AbbVie, Piper likes it a little bit more after the recent results. They bumped the target by $10 more, $299 from $289.
Yeah, no, I continue to like this stock. Obviously, it's roughly flat this year, up around 15 over the last year. Skyrizi and Rinvo continue to be the stalwarts in terms of outpacing the growth from Humira, and I think they got some stuff cooking in terms of their pipeline. So I continue to like this stock and stay long here.
They also make a call, Joe Piper does, on Amgen. They bumped the target to 432 from 381. Let's look at the chart.
378 right now. Last couple of days, I think it went to a new all-time high, right, Carrie?
Yep.
So this is one of the leaders. We've had a little bit of a rotation in the biotech trade. At the end of last year, it was about small caps. It was the XBI. Now it is about large cap biotech. And Amgen gets you directly the exposure you need in that regard.
You loved this trade, speaking of the broader biotech trade, and then if I recall, within the last, I don't know, handful of weeks, you sold out of the IBB, right?
No, it didn't sell
the
out.
XBI?
Didn't sell out of the XBI completely. I did cut the position after a series of incremental buys over the course of the last several months.
Thank you for correcting me on that.
Absolutely.
Ulta, which made your day. Look at a big smile on his face. Look at him, ladies and gentlemen.
I'm your security blanket.
Let's get a shot of him. Look at that. Look at that smile, ear to ear. Look at those pearly whites. All right, Ulta. OPI, top ideas list, record high today. You take that one too.
Can that be disrupted? I don't think so. By AI, I have a 17-year-old daughter. I know what's going on in this country right now. The younger generation is focused on beauty in a way that none of us ever were. It's playing to the bottom line.
Speak for yourself.
Definitely speak for yourself there, pal.
It's playing, I walked right into that one. It's playing to the bottom line. I gave this as a final trade yesterday. And on a valuation basis, you're not talking about an unreasonable PE for this company.
Okay. Costco gets off of OPI's top idea list, Jason Snipe.
Yeah, listen, Costco had a rough year last year in terms of trading. It's down around 4% over the last year, but it's up 16% this year. As I think it kind of runs into a little bit of what's been going on with the staples trade, which has been very solid. So they've managed inflationary costs. I love the runway with the membership business. So I continue to like this one long term.
All right, we'll take a quick break. Mike Santoli's on the other side. senior markets commentator, overtime co-anchor Michael Santoli joins us now. It's good to see you. You think it's too soon to ask whether this is, in fact, the beginning of tech's turnaround?
I don't know if it's too soon to ask. I think it obviously has plenty to prove to actually have that be the case. Makes sense, though, that the market would be ready for the heavyweights of tech, which now have had their valuations compressed, have been out of favor for a few months, to do a little bit of the work here in keeping the S&P in this range. I do think, 26 hours ago, buyers came in and defended the lower end of this 3% range we've been in for months. And I think that emboldened some of the action today. Clearly, the hardware side of tech is working. Amazon went down enough. You sort of see the makings of a little bit of a counter trend trade, if nothing else, with software firming. But I also think, even though this unsettled period in the market has not really been about the macro, it was helped by the fact that you had across the board positive economic data points this morning from industrial production, durable goods, some of the housing numbers. So I think that's all working in the same direction. We're still kind of stuck here, even with the majority of stocks up for the year. This is 40% of all days this year we've crossed 6,900 on the S&P. We did it again this morning. We're sitting right there.
We get unstuck with NVIDIA in a week? In one direction or the other?
It's possible. I'd love to say yes, that's kind of the clearing event. Historically, sometimes it has been, sometimes it hasn't. If NVIDIA vaults above 195 and all of a sudden reasserts an uptrend, obviously that's going to help. I don't know that it's the all-market bellwether that we might hope that it is, but certainly everyone's fixated on it. Definitely.
That's for sure. That's for sure. All right, I'll see you at 3. Michael, thank you. Yeah. It's Mike Santoli. We'll do finals after this break.
Well, what a boring day. So, this is Dr. J. I just wanted to hop on here, and Abdul is out at the moment. So, I just wanted to let y'all know that I'm going to go ahead and end this live because we have had no action hardly since 10:15. It's been really sideways. So, we'll reconvene tomorrow, inshallah, and hope for more active trading day tomorrow. But today has been so sideways. I'm just going to call it a day over here. And I hope y'all have a wonderful rest of your day. And